Welcome everybody to the webinar. We're going to give it 2 more minutes and then we'll get started. Okay, welcome everybody. Thank you for joining us. This is the ASAP webinar on the topic is called The Big 5 Topics Local Partners Must Know to Successfully Manage USAID Awards. This will be presented by Doug Franke from Sustainability Solutions, who is a consortium member for ASAP. And ASAP stands for Accelerating Support to Advanced Local Partners. Next slide, Jeff. My name is Catherine Brokenshire Scott, and I'm the project director for ASAP, and we're really so delighted you're here. This meeting is a satellite session meeting to the 3rd USAID local partner meeting, which starts tomorrow. Next slide, please. I'd like to take this opportunity to tell you a little bit about ASAP, Accelerating Support to Advanced Local Partners. So we are a 3-year contract under USAID, and our sole purpose is to help local partners prepare to become prime USAID partners with PEPFAR funding. As you know, the goal for PEPFAR is to have 70% of USAID funding go directly to local partners. We have 2 strategic objectives. The first one is strengthen local partners as they transition to receive PEPFAR funding as a USAID prime. So that means understanding all the US government rules and regulations, the requirements to administer funds, and in compliance standards with the US government, of which there are many, many compliance regulations, and this webinar today will go over the most important ones for you. The second objective is to prepare local partners to directly manage, implement, and monitor PEPFAR programs and maintain consistent PEPFAR program achievement qualities. So our 2 objectives can be separated. One is for USAID compliance rules and regulations, and the other is PEPFAR performance. Next slide, please. So we have a technical approach. We start with a baseline assessment of an organization where we conduct a thorough assessment and give scores, and then from that, we develop a capacity development plan. We hire local experts to sit with you to learn about the compliance requirements and the performance requirements. We continuously measure. We help you become a prime, and then we provide you continued support as needed. Next slide, please. This slide shows you our assessment tool. I wanted to share it with you. It's called the NUPIS Plus, the Non-US Organization Pre-Award Survey. In the blue icons, you can see that there are 6 squares there. Those are the original domains for the NUPIS. And for the NUPIS Plus, we have added all of these other domains in green. This tool can be found on our website. Next slide, please. ASAP also has many communities of practice, which we started last year at the USAID local partner meeting. So we have 3 existing communities of practice, 1 in leadership and governance, 1 in monitoring and evaluation, and 1 in gender. These communities of practice are led by local partners. They have Facebook groups and WhatsApp connections, and it is peers talking to each other, learning from each other. Sometimes a guest will be invited to share new technology. And in this meeting, the 3rd USAID local partner meeting, we're going to present or plan 3 more. I'm sorry, these slides are a little bit overlapping, but the first one is on sustainability. So that's helping local partners with resource mobilization and helping to write proposals. The second is on compliance with rules and regulations. And the third one is human resource management, which is a very hot topic for USAID. As you know, USAID has launched the new HRH indicators, and every partner has to submit all of their salary information annually. But we also, ASAP helps local organizations with salary bands and recruitment so that you can attract and retain the talent you need to administer a USAID PEPFAR funded project. Next slide. So as you are here, you know that ASAP has webinars. I want to point out that we have done 60 webinars so far with over 12,000 attendees. They are all stored on our website, www.intrahealth.org/ASAP-resources. So you can go and find all of the webinars there and listen at your leisure. This year, we started translating the webinars into French and Portuguese as well. Next slide, please. ASAP also has a regional training program with scholarships. Last year, we had over 1,800 people enroll in our courses, and this year we're hoping to launch in January a new set of courses. Next slide. So the 6 courses that we will be offering through Foundation for Professional Development, which is an accredited higher learning institution. We have USAID Financial Management and Compliance, a short course on fighting fraud, sub-award creation and pre-award survey. In that one, you'll learn how to administer the NUPIS Plus. Public financial management, so this is for USAID government to government agreements, data analysis and presentation. As you know, everything about PEPFAR, it's all about the data. And lastly, journal article development. From the meeting that starts tomorrow, we got close to 100 abstracts, and some of them will be presented, and we want to help people turn those abstracts into journal articles. Next slide. I want to point out one last thing. So day 5 of the local partner meeting, which starts tomorrow, so on November 5th, there is a local partner only meeting. And the purpose of this meeting has been designed by local partners themselves. We had a planning committee. We met several times. And the committee has decided to have this day dedicated to sharing and learning experiences and proposing solutions and make recommendations to USAID. So we'll have multiple concurrent sessions, and the end product will be a slide deck with all of your recommendations to USAID. Some of them can be just problems without solutions, because that would be for USAID to come up with a solution or acknowledge that something is a problem. And then USAID has agreed to respond this time to all of the recommendations. Next slide, please. So on November 5th, there will be 7 different workshop groups in English, French, and Portuguese. So in English, we have one on resource mobilization, USAID proposals, and work plans. Also one on capacity building for award management, and then one on strategic information reporting and communications. In the French and Portuguese sessions, we've combined some of these topics. So there'll be one consolidated topic on resource mobilization and organizational capacity building and SI reporting and communications. So if you're attending the USAID third annual local partner meeting, we hope you'll stay for this very important day on November 5th. I think that's all of my slides. Is that correct, Jeff? Yes, so I'm now going to turn it over to our presenter, Doug Franke. So Jeff, if you stop sharing, and then Doug will start sharing, and we'll hand it over to him to lead the presentation. While he's getting set up, there is a section on your Zoom for Q&A. So there's 2 places. We prefer that you put your questions in the icon that says Q&A. That way we can save them, and we document the questions, and we put answers. We answer all the questions, and then we post it on our website. The other place is the chat, which I see is very active right now. So thank you everybody for your chats, and welcome to the webinar. And Doug, I'll hand it over to you.
Fantastic. Thank you, Catherine, and welcome all to the webinar. My name is Doug
Before
Franke.
you get started though, you're in presenter mode.
I
can
see that.
Slides. Yeah.
All right. Let me see what I can do here. It's the sharing is, let's get out of here and do this. 1 second, please. I see that as well. Maybe Jeffrey can jump in here, but let's get into that slide deck. We were in, of course, in the practice mode. Here we go. Okay, let's get out of there and get rid of that. You seeing anything? It should pop up now, full screen, I hope. Let's see. You seeing full screen?
Not as yet, at least on my side.
Okay, here we go. Let's go here. And let's go here, and let's share screen again. Thank you. Try this one. Here we go. Thank you.
Okay, that's better.
I'll get rid of the presentation view. That should pop up. There we go. Happy?
Perfect.
Hey, welcome all. My name is Doug Franke. As Catherine said, I'm delighted to be the Managing Director of Sustainability Solutions, which is a very proud and happy member of the ASAP IntraHealth Consortium. They've done fantastic things over the last 2 years, and as Catherine presented, I've got no doubt year 3 will be even better. So quite happy to see, as what Catherine talked about, next year, going from strength to strength. So let's just go here. Okay, yeah, that's what we look like, Sustainability Solutions. Just very briefly, we are a firm 16 years old, just focused on USAID, CDC, mission and implementing partner and auditor strengthening. So that's what we do. I've been doing this for 40 years, and I'm trying to bring all that knowledge to share with you over the next 3.5 hours. We'll do our best. We, not just do we do this sort of thing, but we also do the yellow book audits, the strengthening, certifying the auditors, and we're quite excited to be the only firm in Africa that has the peer review, which is pretty important if you get PEPFAR funding from CDC. Okay, so now the topics that Catherine and the team chose to make sure you get the most bang for your buck. is this is all fairly high level stuff, but it's so important to get these components right. And first of all, it's understanding your agreement. It all starts with your relationship with the US government. And although there could be 1,000 rules of the US government, the ones that apply to you all must be in your agreement. So people say there's a rule for that. If it's not in your agreement, that rule doesn't apply to you. So that's why it's so important to get and read your agreement, and we'll talk about that. Next, we'll talk about the standard provisions that come attached to your agreement. So again, when you're reading your agreement, you're reading what we call the mandatory standard provisions. And there's two components there. We'll go over, as Catherine said, the most important ones. Then we'll talk about the cost principles, the things that are allowable to charge to the US government. Many things are allowed, many things aren't. And then there's the gray areas. And we want to make sure that you're aware you don't want any gray areas. So we will clarify those. We'll talk briefly on the 10% de minimis. As of November, where are we now? No, sorry, February 22nd, USAID, the US government changed the rule. And that I'm going to ask you now a little bit, because this course is for you. Are you a prime? Are you a sub? Are you a prime with subs? The reason for that is the rule changed now that a prime, a US prime, must give an indirect cost rate or the 10% de minimis to a sub. Okay, so that's a little bit of a change. And I think many of you probably have existing awards where you're not getting your 10% and wondering why. Okay, but certainly going forward, I think that's beneficial to everybody. You know, what happens too frequently, and Catherine will remember when we had the meeting here in Johannesburg 2 years ago. I'm talking to you from Sustainability in Johannesburg. People were in the audience, LIPs like you, implementing partners, were standing up and saying, I don't have enough money to complete my award. Okay, what they didn't realize is if they don't know which costs are allowable, they won't ask for them. And so the de minimis is one of those things you certainly should be on the lookout to request. Okay, we'll talk about prime and subaward relationship and management. I think Catherine said that was going to be one of the things that's going to be on a future upcoming webinar or part of the FPD scholarship program. That's fantastic. That's so important to get that right. Getting that right could mean, unfortunately, very bad luck and bad news for partners, unwittingly. Okay, so what we do is we start with what we call the USAID puzzle. And my assumption has to be at this point, although many of you I've seen names come through organizations, many of you are very well versed in this, but some of you may not be. So my goal is to help pull together the pieces of the puzzle that could be confusing. And as we know, puzzles always start with the four corners. Let's just get our annotator going here in Zoom. They call it an annotator, the spotlight. Okay, and so the four corners, as we know, are where we start because they all have square edges on the two sides. And that would be your award, understanding your award. Next was going to be the pieces start coming together. And as I said, we'll talk about the standard provisions. We'll talk about the cost principles. We'll talk about prime sub relationships. And the final thing that would come in theory, would be U.S. Agency for International Development. But from our point of view, is really that A stands for audit. Okay, when A comes in, meaning when you can have your audit conducted, when you complete it, when it's successful, when the mission and Inspector General have signed off on it, you're done. Okay, that's what you want to be. You want to be done after you've spent your hundreds of thousands or millions of dollars each year, get the audit, have it be clean. And how do you have a clean audit? It's by understanding the rules. That's why we're here today, help you understand the rules. Okay, so a lot of it has to also do with relationships, funny enough. And what happens is, I'll show you in the next slide here, where we'll focus on USAID. So USAID basically has the agreement officer, and she or he is normally in your mission. It's possible there could be a regional mission, like here in Southern Africa, where the AOs would sit in Pretoria and service Namibia, Lesotho, Eswatini, Botswana. But basically, many of you, and we have many, and welcome to all of you from all the countries, many of you have your own agreement officer. Okay? He or she will be almost a little bit more like a lawyer or an attorney, and they craft the legal document on behalf of the US government. Okay, next to them would be the AOR, that's your agreement officer's representative, and that's the person who has what's called substantial involvement. They're substantially involved in your award. And quite interestingly, an OIG report came out, Inspector General report came out looking at a lot of these things. And I was quite surprised to see that there's much less interaction than I thought there would be. So even if recipients, even if your AOR doesn't call you on a regular basis, I think you want to make sure you're reaching out to them with any challenges, success stories, of course, but especially the challenges. I mean, this course is about helping you beat those challenges. Next to them is the Office of Financial Management, also known as the Controller's Office. And those are the folks who process your invoices, might be performing the NUPASs that Catherine just talked about, the pre-award surveys. They can outsource those as well. And many of the other functions. They also tend to help, this Controller's Office also tends to help the agreement officer interpret the auditor's findings. When we auditors find stuff, it's not that technical, but certainly the Controller's Office people understand it way better than AOs. That's their job. Depreciation, amortization, fairness in allocating costs, that would all be well within the OFM's purview. And finally, we have the OIG, Office of Inspector General. We've got here in Southern Africa, we're blessed to have the Africa Regional Office led by Robert Mason. We are so lucky in Africa here. We've got Robert Mason as the head. He's rotated throughout the world and he's heading up the team. We've got a Rig I here as well, Rig Investigations, and of course, Rig A, the audit team. So we're quite lucky. They're very helpful. Many people aren't happy with what's generally called the RIG, Regional Inspector General, but I think all recipients, auditors, and missions should be happy. We've got a qualified team here. Okay, so that's who, let's go back to the previous slide. That's who you prime recipients might be coordinating with, especially your AOR. She or he will have the substantial involvement, and that's their job. Okay. Now, generally, when I do this course, and of course, this is the very short version, but happy to do it. The whole point is I generally have 3 rules that you would follow. And rule number 1 is called the 3 Re's sometimes. 1, respect your donor, respect your AO. Okay. I mean, there are people too, they're working hard. They work just like us, day in, day out. And, when we talk about relationships, you want to have a positive relationship with the entire team, but especially your AO. Because as we're going to see, they ultimately have the authority to deal with all of your financial situations, your money, obligating and giving you money, as well as changing yours or amending your scope and objective. Yeah. So you want a good relationship. Same thing at the prime and sub level. I'll go back to that in a second, the second slide. Okay. We need to communicate. Open communications is always best. Next, we have to realize that our different officials there have different roles and responsibilities. Okay, now there's something, if you go to the fantastic USAID website, you can search on mini documents, of course, but the one ADS 303, and let me just suggest to everyone, get a pen or pencil out and some paper, because with the time we have, I'll be throwing out some things that I would like you to refer to later on, if this is your area. And so ADS 303 is one of them. If you get funding from Health and Human Services, maybe CDC, PEPFAR funding, or NIH, theirs is in the Health and Human Services called Grants Policy Statement. Okay, but in there, it explains whose job is what. So let me just jump down to here. Okay, what we have to realize is although the AOR has substantial involvement, is supposed to work with us, he or she doesn't have authority for anything related to money, anything related to your targets or your scope or objectives or and so they do have, they can be delegated certain authority, but they don't generally come with it. So when you get your agreement, rule number 1, respect your AO. 2, read your agreement. Okay, you'd be how surprised them. Every month we do a course like this and we ask people when we have more time, how many of you put your hand up? How many of you read your agreement? Probably less than 20% of the people have read the agreement. Guys, if you're going to spend millions of dollars of US government money, read the agreement. It's not that long, especially I'll talk about having a compliance person or persons, and those folks truly have to be aware of all the requirements. And the reason for that, go back up to here, the second slide talks about informal commitments. And this is where someone on behalf of the US government speaks to you without authority. And many people think, well, USAID said this, USAID said this. It's not USAID speaking. It's the PO, sorry, the AOR, AO, OFM, and all of them don't have authority. Okay, so you truly need to make sure. So although rule number 2 is read your agreement, rule 2B is read something called a designation letter. When the AO creates the award. They designate and delegate authority to the AOR. And you, recipients, need to be aware of that, because that now you know when that person speaks to you and says, you can do this, you can look and see their list, say, all right, I can see you're authorized to do that, so I will do that. Okay, but it'll never be about money, and it'll never be about your scope or objectives. Okay. Okay, so what else do we have? Okay, so yeah, make sure you know authority between your people. And finally, we're going to talk about primes and subs here. And in the uniform guidance, which are the new rules that came out now 6 years ago, but still relatively new, and they just changed last October significantly. The concept is there are limitations to how demanding any U.S. government agency can be on a prime. There's rules in there, and they're supposed to respect that. And that's when the agreement officer creates your award, she or he knows what these limitations are. So they're not going to say, I need weekly reports, or I need the financial management every week or something. There's limits. Okay, that's at the prime level. So on this little slide here, you see we have a prime, and then we have sub-recipients. And what I wanted to say here is, because the prime is ultimately responsible for the money that they pass through to the sub, they're called a PTE, or pass-through entity. They're responsible. And if something goes wrong at the sub level, the prime holds the bag. The prime is responsible. So it is possible, and we'll talk about this more in the prime sub-recipient space today or next time, that it is possible that the prime, and frequently is, more demanding on the sub. And subs frequently say, oh, you're so hard on us. So, well, that's true, but because they have to be, okay? So just realize that. Okay, so let's just finish out this slide here. We've got the prime, and then we've got the subs. So what are these boxes mean? Well, someone at the prime organization has to serve as the agreement officer, even though they can't have the years of experience that the AOs have, unless they work for, again, maybe the IntraHealth, FHIs, Care, Save the Children, who are big enough to hire ex-agreement officers. Generally, at the prime level, especially here, I mean, many of us are in Africa, and I know people come from Myanmar and are over in Latin America as well. Welcome all. But the majority are here in Africa. And the reality is, it's probably going to be a local prime, an African prime, with a local sub. And therefore, the prime, someone at the prime, chief of party, finance manager, deputy chief, whatever, compliance person, she or he has to create the sub award. And that's what the last slide, last pack of the day is. Okay, so that's a tough role, because you have to, you're meant to be as smart as the AOs and competent, but again, you didn't spend years learning how to be that AO. That's a tough one. Then people or persons can be, this AO role is significant in that it is a person, because that person signs or binds the prime with the sub. Whereas the AOR could be many things. Could be the monitoring and evaluation people, could be the performance people, could be the technical people, anything. That's just sort of responsibilities that I have there as a box. But again, you're responsible, you primes are responsible to the mission, and the subs are responsible to the prime through people. And then finally over here, we have what we call the subrecipient management team. And what that is, those are the people who are responsible for making sure that the subs complete and carry out everything that they must do for the consortium as a whole to be compliant. Okay, now what about these boxes? Sub-Al, that's a large sub. That is an organization that spends, not receives, spends more than $750,000 in its fiscal year. Not the prime's fiscal year, not US government's fiscal year, its fiscal year. By definition then, a small sub is an organization that spends less than $750,000 in, and I say US government money, but in this case, I'm meaning USAID money. Okay, I know the majority of us are USAID focused, but some of you may have money, and I will be asking hands up in a few more minutes about, do you get dual funding? But you have to realize that there are some differences, and CDC's rule is $300,000. That was the old threshold for audit. It hasn't changed. Okay, so in those two situations, that is where if you're spending more than that, you are going to have your own, more than 750, large sub is going to have their own, what we call a yellow book audit, or one that's conducted under US generally accepted government auditing standards. And that's what the missions all around the world have just done. By September, end of September this year, they were meant to have identified and created the new lists of approved auditors. Okay, if anyone needs it, I can shoot you the one for Southern Africa. I've got the one for Thailand, and some of the other ones are still being circulated. Okay, so now a site, I just want to say, again, this is more of a slide that is for more detail, but a site is where an IntraHealth or FHI or Save the Children has an office in this country. So there is an office in South Africa here for all of those organizations, but the bottom line is from an auditing point of view, they don't get audited here like the local subrecipients. Okay, there's no opinion on the local IntraHealth overseas offices, if you will. Okay, I'm going to have some Q&A coming up in a minute. This very busy slide, I never need you to learn numbers or anything. I just need you to know there's a rule for that. And obviously, we're limited in how much time we have, but I just want you to get the high-level overview about your compliance requirements. And the important point about this one is the uniform guidance, which I'll be talking about on the next page, is represented by those green boxes, subpart C, D, E, and F. Okay, but the important point here is in the middle is your cooperative agreement from the USAID terminology or notice of award from CDC, your NOAA. Okay, and the important point here is your agreement officer, she or he knows these uniform guidance rules and has crafted your award so that if there's a discrepancy, conceptually, you should follow your award. Okay, if the agreement officer has misinterpreted something, that's not your problem. When we auditors audit you, I can sit there and say, this rule doesn't make sense, but I can't audit against your award. Okay, so that's why it's so important to read your award, follow the rules of your award. Now, there's no doubt, every agreement officers, as we know, turn around, they rotate through missions all over their whole life, 1, 2, or 4-year missions. And the bottom line is it will be impossible for an organization to have the same agreement officer for the entire life of their project. Because normally, well, again, some countries, they rotate 1 or 2 years, but even a 4-year mission, still, your award is generally 5. So you truly need to make sure you understand what's in your award and probably how your agreement officer interprets certain things. Okay, so subpart C, just briefly, is what happens before you get your award. So that's not too exciting for us here. Subpart D is very exciting because post-federal award requirements, meaning the stuff that we have to do once we get our money. Okay, we'll talk briefly about the standard provisions in the next, then we'll talk about the cost principles here, subpart E, and we won't go into the audit because that's beyond this course and your need for today. Okay, so what do we have here? We have the new Code of Federal Regulations. It was changed. The old, it was good for 5.5 years. And then on, what was it, October 10th, it switched over. We were training auditors in Nigeria the day it switched over. It was quite interesting to go into this concept. But the new, it's a little bit hard to navigate. But the one good thing about this version is that you can see here, it shows you when the last updates were made to the federal regulations. So all of you recipients should have implementing partners at any level. You should have a compliance person I'll talk about, and she or he should get familiar with this document because that's where our rules come from. Okay, so with that, I'm going to look at the questions here. I don't know if Milani or Lalani or anyone else would like to look along with me, but what do we have? Lalani, do you want to unmute yourself?
Yes, Doug, we have 2 questions.
Great.
One is coming from Dennis. He's saying in 2019, we won a project in a consortium as a sub with a prime, but unfortunately, we were told that because we were not entitled with de minimis, that is why we were rejected in that consortium. So the question is this true? If not, where should we find the explanation concerning the rejection?
Okay, that's a good question. So, again, where does one start? When they created the uniform guidance, the group who created it was called COFAR, the Council on Financial Assistance Reform. And in there, they created 3 different Q&A, substantial Q&A documents. And if you send me at the end of here, I'll put my email, and if anyone's interested, I can share these documents with you. But in the first document, but it's in the third document because that's a consolidation of all of them. It actually said someone like you reached out to them, COFAR, and said, my prime is not willing to give me the 10% de minimis. What should I do? And the answer from the gurus on high said, if your prime is not willing to give you the 10% de minimis, the prime, are subject to termination effectively. And I can show you this again. I'll shoot that to you. So definitely you should get it, but absolutely, as I said, as of months ago, it's become super clear, mandatory that they do give you either the NICRA, which is beyond this course, but most foreign NGOs are not going to get the negotiated indirect cost rate agreement, but you should get the 10%. So I don't know who the prime was, and we don't need to know. I mean, this is in this course, what happens in Vegas stays in Vegas. We don't talk about good or bad organizations, but some just didn't, I'm not sure that's the only reason, maybe why they didn't want to give you, but again, that's beyond the discussion I have now. Thank you. Second question.
Yeah, second question is coming from Michael. Oh my God, am I missing it? It's just... Yeah, so Michael is asking,
from Abacha. We currently have an award running.
Yeah, so Michael is asking, can there be a subprime in G2G activity, and what are the guidance on it? Will the same prime and subprime role and responsibility be applicable under G2G activity?
Okay, so certainly here in Southern Africa, we have quite a bit. I know Ghana has done quite a bit of G2G work over the past years, but here we have many very strong, we would call parastatals, like Medical Research Council and NICD, National Institute for Communicable Diseases. And I believe they are primes, and under them, yes, they have subs. So it is possible. And that does make sense because, I mean, the government entity, take it, NICD, quite strong, like a CDC for South Africa. And, but they can't implement, they're all the doctors and guys doing the science. They need to work through. So yes, I think it's totally possible to have a sub under a G2G award. Good question.
Next question is from Peter, is asking, is the de minimis always supposed to be 10%, or prime may allow to reduce it?
No, it must be 10%. The prime is not allowed to reduce it. Now, again, what kind of pressure? Potentially, a sub could say, look, we're willing to work for 8%. Like, remember, Health and Human Services allows an 8%, not a de minimis, an indirect cost rate. But generally, no, there shouldn't be pressure for you to take less than 10%. Okay, good question.
The other question is an FAA an audit?
Now, FAA, which is a fixed amount award, is not audited. A fixed amount award, I'll just give you a brief on that. Fixed amount award is like a baby sub award, but one, it's not audited. Two, it's good maximum for 3 years. Three, for prime and subs, fixed amount sub award are limited to what's called the simplified acquisition threshold, which is $250,000. And four, funnily enough, the cost principles do not apply under fixed amount awards. Again, if you want, reach out to me. We have a digital pack that has 4 important USAID documents that explains all about fixed amounts awards. But if you're a prime and you have an option to use fixed amount sub awards, you definitely should do that. Next question, please.
We've had one question that came up in the chat.
Okay.
It says, hi, Catherine and Doug. I'm very confused today. All along the course of the award, we have been dealing with the AOR, being involved in the money issues, and have been a victim of false accusations coming from the AOR. Even after supplying the proof of money management, the AOR was like the prosecutor instead of being the technical advisor. And sadly, the FAA award after achieving the milestones according to the agreement. What are you saying about this?
Yeah, that's obviously it's an individual situation. I think, again, anyone based on what you've just heard in the last 20 minutes realizes always copy your agreement officer. She or he is the one who has the true power. And yeah, that sounds unfortunate, but it's like the power was usurped. And if you didn't realize that, then yeah, that's unfortunate. But to go back. It could get messy. You could appeal under the standard provisions. There's an appeal process if the mission sent you a bill for collection. But sometimes the AOs, and in the award itself, it normally will say there's a clause on informal commitments, and it says, I'm giving you your award. I'm the agreement officer. Read the award. In there, it says, I'm the only one who can deal effectively with money and certain things that we're going to see here under number 4 in the next session. And at your own peril, do you operate under instructions from the AOR? And it's unfortunate. It happens. I mean, I've got stories where an organization had to pay back $1 million after listening to the wrong people. It was a shame. They were told, do it, do it, do it. They were behind in a certain function somewhere in Africa. They did it under the instruction of the acting ambassador. They caught up, but they had spent their own money. And the agreement officer said, I didn't obligate that money. I'm sorry. You just spent $1 million of your own money. So never let that happen to you. Learn from other people's mistakes. Okay, sorry, but in terms of questions, we've got this limited amount of time here, but let's just carry on.
Okay, so let us know when you want to move forward. So
okay, let's just do a few more acute questions. These are great questions.
So just to get clear, the $750,000 audit threshold only applies to the subrecipient who have received funds from USAID and other US agencies, except from CDC. So saying that the sum of other US funds except CDC.
Okay, so I'm working with CDC and USAID on this right now. It could be complicated. Let's just assume what USAID, this is for a USAID audience. Let's assume you talk to your USAID agreement officer. Generally, USAID wants its own funds audited. Now, at the prime or sub-level, $750,000 is the audit threshold. So the prime could spend $2 million, and under them, they have 3 subs who each spend, $750. I mean, if the math works out. But anyone who's over 750 has to have what we'll call the USAID Yellow Book audit. CDC, a little different kettle of fish. I'll tell you what, let's just do something quickly here. Just please put into the chat, or sorry, not the chat. Please raise your hand. I think we can see raised hands here. Please raise your hand if you get funds from USAID and CDC. So all attendees, just put your hands up for a minute. How many of you receive funding from both USAID and CDC? I don't want to waste time, unfocused on CDC if it doesn't matter. Okay, just leave your hand up for a second there. Okay. All right. So we've got some, not too many. This is okay. So it's primarily a USAID group. Okay. So yeah. So the bottom line is, I'll tell you, the official U.S. government rule is all funds should be audited together. That's called the Single Audit Act from 1966. But people don't do that. So USAID, logically, the agreement officer gives you your $2 million. He or she wants to know what happened to his or her money. CDC, sort of the same thing. So mixing, when we do audits, we audit the USAID funds differently from the CDC funds. We audit them at the same time, but the reports are sent separately because just for the ease of the reader. But that's a bit complicated to talk about, and this course really is not trying to cover audit questions. But yeah, I'll stay over time tonight to answer these. But as I said, I'll give you the email afterwards. Reach out to me after the course. Happy to continue to advise. Thank you. Next question.
Okay. Do we need to support the de minimis cost?
Okay, so one of the new rules out, and this is different from USAID and CDC, but in just weeks ago, it came out that, so if you're taking notes, this is where you want to take it. It's section 2, CFR 200, 400.414, F as in Freddie, F, and it's the third sentence in there. They've added a new sentence. No documentation is required to justify your 10% de minimis. Okay. Now, this worries me, being a U.S. taxpayer, being an auditor, and on behalf of the missions. If you don't have to justify it and it's not audited, isn't that just a license to have free money? But you have to go on to the next sentence, and I think I will be covering that a little bit later in the 10% clause. It says you still have to be able to prove you're not double counting or inconsistently charging the costs as both direct and indirect. The indirect costs are a little bit complicated to talk shortly. There's a whole one-day course just on indirect costs. But the bottom line is you don't have to justify it. But if I'm sitting in a mission, I want some comfort, and CDC, absolutely. I want some comfort to have a feeling you're not going to double charge the US government. Good question. One more for now.
So this next question is, can a fixed amount prime have a subrecipient?
A fixed amount prime. So a fixed amount awardee. Okay, so when USAID issues fixed amount awards, they're not limited to the amount. I was working with one of my favorite AOs up here in Pretoria, and he was issuing I think it was a $7 million fixed amount award, which I thought that's very big. But generally, I would say no. Fixed amount awards are for unique situations where you can define milestones, you can agree on the costs, and then you just deliver. It's almost like a contract. You deliver maybe a monthly report or something, and you get paid. You're paid based on the milestones. They're not audited. Okay, well, let's do this. Let's carry on with our some of the courses. Save these, and insofar as I have. I mean, I will have the 10% de minimis here. I will get that. I promise to get through it. I just have to get through these costs first. Okay, so let's just put this on hold for a second. Great questions. Okay, so the concept of in the uniform guidance, also known as the UG or super circular, they go on to explain. It wasn't explained initially, except 2 places in the original webinar, which none of you watched. And then elsewhere in some other very obscure follow-up process. But then now they put it into the yellow book, into the uniform guidance itself. Okay, and what it says is conceptually, and this always applied to auditors and our compliance with the yellow book, which is the government auditing standard. It says, anytime your award says must, then you have to do it. Anytime it says should, you should try to do it. Okay, so I had our training coordinator, Rose, go through the Code of Federal Regulations. There's 884 instances of must. Okay, a lot of appendices, 11, but let's not worry about that. The bottom line is going down to our standard provisions, which we're going to talk about soon. There's 351 musts. Okay, for this reason, you truly need a compliance specialist in your organization to go search, get your award, search for the musts, figure out what all these things are, and then not that she or he's going to be the compliance person doing it all, but she or he should design and designate responsibilities to a number of people in your organization. Okay, here's what the standard provision cover looks like. It gets updated from time to time. You'll notice at the bottom here, it was last updated on, that's American, March 31st, and this was for the Mexico Principle under President Biden. That's why it changed. Well, there was one other small change in there, but that's why it changed. So it changes from time to time, and recipients, you need to be aware when your agreement officer changes your provisions, because now you're subject to new things you must do. And we auditors look at this. We'll ask you for, give me your award. First of all, give us your budget. I want to see your budget because I want to see what you originally asked for. Hopefully that you justified some of these costs you're trying to claim. And then I want your award and all the amendments. Okay? That'll enable us to audit you correctly. Okay, just highlighting here that, again, there are some differences between what USAID and CDC requires. So this is just a screenshot of their sort of first page of their terms and conditions. Okay, here's the skeleton of your USAID cooperative agreement. There's 4 sections. Attachment A, which is called the schedule, which is the most important or highest level of authority. Attachment B, the program description, which is essentially what you propose to do. So great, we said we're going to have 1,000 people on care and treatment in Kenya. Okay, so great. And then we're going to say, here's my team, my chief of party, my finance team, our methodology, our footprint, whatever we have, our MOUs, and here's how we're going to deliver. And then basically USAID says, all right, well, we asked you to, to serve 10,000 people on care and treatment. And then your description then becomes part of an attachment to the agreement. You said you could do it, now do it, deliver. Okay, attachment C, which is what the next section is our non-US standard provisions, or RAAP, which means required as applicable provisions. Okay, and there's a US and a non-US version. And then finally, branding or marking, where US government tries to, USAID certainly very keen on making sure that their logo is widely observed. Okay, so here is, so going back up here, attachment A, the schedule. And here is an example of what came out of one of our clients' schedule, which is quite busy, but most of you will have many of these things in your award. Okay, so this is what you must read. Someone's a compliance person, wake up, search for the musts, figure out what we have to do. And so the standard provisions covers a lot of these. It's going to talk about the title and use to property, like what happens to our equipment. It talks about indirect costs. Most of you will get the 10% de minimis. Many of you will generate programming through condom sales or something like that. What do we do with the income? We may have cost share. How does it have to be treated, and so forth. Geographic code 935, 937. Where can we buy stuff from? Okay, that's what's all in here. So very important that someone reads this. Notice down here at A16, the standard provisions. What this says, it's going to say in subpart 3 down below, you have to follow the standard provisions. Okay, then the rest of our high-level discussion is the OMB stands for Office of Management Budget, and the FAR stands for Federal Acquisition Regulations, which are really the cost principles for the for-profit entities. So what we are interested in now is the subpart E, the 2 CFR 200.400. I'm going to zip back up to show you where these were in the little boxes. Okay, that's this section down here in the bottom left. That is your subpart E, cost principles. Okay, we are all lucky that they have consolidated multiple versions from educational institutions, state and local governments, and not-for-profits into one subpart E, which is good. We'll spend a little bit of time talking about those this afternoon. Okay, the overarching concept is that the US government will bear its fair share of the cost to implement your program. Okay, so we'll talk about under allocability, there'll be direct costs. Maybe the only reason I'm performing male circumcision, or the only reason I'm buying 1,000 test kits is because I'm going to do 1,000 male circumcisions. The only reason I'm going to buy 500 beds is because I have 500 orphans to take care of. Okay, that's very straightforward, the direct cost. And then there's the indirect cost. How do I allocate my rent? How do I allocate my HR? How do I allocate my other stuff? Okay, and that's got to be on a logical basis. But the third one that very few agencies actually make crystal clear, and it's become more clear, and I'll show you in the subrecipient management slide today. This is like within the last 2 weeks. It goes on to say there's a third version of allocability, which says if you must incur a cost to be in business, you might have some kind of an NGO fee. And again, frequently CDC doesn't want to pay for your board, your overhead, your internal control structure. Those are absolute must to be in business for the US government. But sometimes they say, oh, you know, we cover that under your 8%, or we don't cover that. Well, I'm going to show you where they do cover it. You just have to know how to ask for it. Okay. So the US government's always very fair. They'll bear their fair share, but they're not going to bear an unfair share. So don't try to run through someone else's overheads, Gates Foundation, Global Fund, Elton John Foundation. You say, oh, some of the smaller foundations say, oh, we're so small and US government's so big and they're giving you $10 million and we're giving you 500,000. Let them pick up our overheads. No, that's wrong, right? Every organization has to pick up their own overheads, and we'll see that. Okay, so conceptually, these are the 4 things that we auditors look for. Are the cost you charge to the US government must be all 4 of these things: reasonable, allocable, allowable, and documented or supported. As an auditor, if you can't prove to me that the cost you're charging USAID are these 4 things, they're going to be questioned, and then you may have to pay them back. Okay, so don't pay them back. Document everything, learn the rules. Okay, reasonableness. In a nutshell, this is called the prudent person rule. You'll see down here on line 3, prudent person rule. And the concept here is that we are all prudent with our own money, right? You probably got paid last week and now you've got some money in your bank account. You know where that money's going, right? Rent, food, school fees, your kids, insurance, you know where money's tight, right? The US government wants you to be as tight with their money as you are with your own. Then that is reasonable. Now realize that it's your job that all costs you charge through are reasonable, but it's the auditor that ultimately determines whether they think it was reasonable. So your job is to be reasonable. My job as the auditor is to say, nah, you were or were not reasonable in my opinion. Okay. If an auditor says a cost is unreasonable, that becomes ineligible, meaning you may have to pay it back. Okay. So try to be prudent with US government money. There's a few other items that are important for reasonableness. So please go to your award and not the award, go into the cost principles and read these. Reasonable is under 404. Okay, and so basically the bottom line is you need to make sure in your budget you document why you need to incur costs for your project. And the third bullet point is probably the most important one for the time we have is the US government loves competition. Okay, and how do we get that? Well, you should be, and we don't have a lot of time to talk about procurement, but conceptually, when you get your award, you should determine what are we going to buy over the next 1, 2, 5 years. Okay, and where are we going to get it? And you should be creating a preferred vendor list for all of the things you're going to need. Okay? As an auditor, I can come in and see, show me your preferred vendor list. I see you got 3 or 4 guys on the list. They all provide generators, diesel, whatever you need, automobiles, toner cartridges. I want to see competition. That's what the US government wants to see. Okay, reasonable, then allocable. Okay. So each of our costs, each of our project is known as a final cost objective. The final resting place for cost is called a final cost objective. And your job, recipients, is to allocate costs to your particular project on a fair, consistent basis. Okay, so notice this here if you're taking notes. 405, this is from 405A, 1, 2, and 3. So you can charge the US government for your project cost if, okay, 1, it's incurred specifically for the award. As I said, 1,000 or 500 bed nets, 5,000 orphan beds. It's the Bob Strauss concept. He's the global guru for 50 years. When Bob taught me, it's the but-for concept. But for this project, I would not have incurred the cost. The only reason I'm incurring the cost is for this project. That's quite easy to document. We auditors rarely have a problem with that. It's going to be in your budget. Okay, next, it's for a cost that benefits multiple projects in your organization. Okay, and the important point here is it can be distributed in a reasonable proportional basis. So I like to use the example of rent. Okay, so you're in a building, you have the ground floor, you have the first floor, the upper floor, and each office has 20 desks in it. So the USAID project's on the ground floor, we got 20 desks. Global Fund is upstairs, they got 20 desks. The rent check comes in, the rent invoice comes in for $1,000. How do we split rent? Well, 50-50, I would say. We're using half the space, 50-50. So there's many things like this that you recipients must allocate those joint and common costs, they are called, between your projects on a fair basis. Okay, it's this third one here that frequently, I admit, agencies don't shine themselves in glory. They don't explain what this third one means. This is from the cost principles, not from your USAID award, but the cost principles do apply. And that's what it says. If you have to incur a cost to be in operation in your country, the US government will pick up its fair share. Okay, I'm going to show you in the subrecipient slides if I get time. If you're writing notes down, write down 2 CFR 200.405 D as in Delta. Okay, there it makes quite clear this as well. And that's what the new uniform guidance specifically states. Okay, they say you get the NICRA subs, you get the NICRA, you get the 10% de minimis, unless you want to direct cost everything, which you're still allowed to do, but as per this D, which means you can recover all of your costs. Okay, so allocability is it's essential, and as Catherine mentioned earlier, and I mentioned when we did 2 years ago when we had the kickoff meeting here in South Africa, many people were saying, I'm not recovering all my costs. Well, again, they didn't realize you could if you know what to ask for. Okay, generally, realize this, cooperative agreements, generally, historically, 90% of the points for winning a cooperative agreement were based on your ability to deliver, not on your costs, okay? Yes, costs are 10%, and they're not going to have all these wild, huge salaries and things like that. But the bottom line is, under cooperative agreements, you're supposed to deliver, and you need enough money to deliver. But the U.S. government's they're not going to look at your proposal and say, oh, look, they forgot to charge adequate auditing fees. Oh, look, they must be way undercharging. Rent in that country is way higher than that. They don't know it. Okay, they're not going to coddle you. They're not going to help you, not help you, but they're not going to go out of their way to ask you to raise your prices. So you need to do it. You need to be reasonable and understand what you must charge. Okay, it's just the rest of allowability. Just again goes on to say you should only be getting, asking for costs that enable you to complete your award. Okay. Okay, I'm going to leave it at that. Okay, so we have some more Q&A. Fantastic. We're getting on here. And again, I got to save time for the rest of our stuff. So our Q&A people, have at it.
Yes,
Questions?
we have a question goes by, can a G2G mechanism be allowed to hire a compliance officer or official?
Okay, so one of the rules, okay, I mean, again, this can get complicated because generally the US government cannot dictate the cost principles to foreign governments. Okay, most foreign government, non-US governments have what's called your Public Finance Management Act or the Municipal Finance Management Act. And generally, you know, the government of pick your country, Nigeria, Ethiopia, Uganda, you know, all of you are on. You have your general rules for governance. So the US government generally defers to your government's cost principles. But certainly we audit, again, most of the auditors of that in those countries will be either your auditors from the Auditor General, or the Auditor General sometimes delegates or subcontracts that to your auditors in your country. Okay, so they're going to have to look at that. But generally, you're going to hear me saying the cost principles in a few more minutes. The concept is that any cost might be allowable if it's reasonable, allocable, and not specifically disallowed. Okay, in the cost principles, there are 56 specifically mentioned things. Some are allowed, some are not. Okay, so it depends, but it's your job. And if you're taking notes, I'm going to talk about 407 where you can get prior approval to clear up any gray areas. None of us, you implementing partners, we auditors, or the US government wants a gray area because it only can hurt you, the implementing partner. So let's clear up all gray areas right now. Okay, and we'll get there. Next question. So I'd say yes, it's possible.
Okay, the next question is, I would like to know how the de minimis is calculated. The reason I'm asking is because we do not have the funds for activities. The de minimis only on the indirect cost or activity cost included?
Okay, so the 10% de minimis is added on top of what's called MTDC, Modified Total Direct Costs. Okay, so that's the base, and you start with basically your total direct costs, and then you take out many things: equipment, rental, construction, participant support costs, scholarships, certain things, and then all of the funding over $25,000 of each sub-award. But that's a specific, we'll get there today. That's a specific question, and I have a specific answer for you. Good question.
Yeah, next one is indirect cost the same as de minimis?
No. An indirect cost is, well, you can receive funding through a negotiated indirect cost rate agreement, but that's where the mission has to enable implementing partners to do that. Generally, overseas, they're currently not promoting NICRAs, negotiated rates, for local organizations, okay? But the 10% de minimis should be automatic for USAID. For CDC, it's not, and I'll show you this. Theirs is an 8%, but it's not a de minimis. It's an indirect rate, and I was talking with the people in Atlanta last week and trying to get clarity on this, but I think from their point of view, that 8% is auditable, whereas the 10% de minimis is not auditable. Okay, next question.
The next question is, do we need to get prior approval from the prime to spend the 10% de minimis?
No. So, matter of fact, you don't need any approval to spend it. What happens is you get it, right? So let's just say a very simple situation where you're an organization and you're going to get $1 million award, $1 million a year. Great, $1 million. Okay. So then what has to happen is you, the recipient, maybe with the help of your prime, you have to calculate what is my 10% de minimis going to be. And so I say you start with your total budget, and then you take out rent, equipment, subrecipients, certain types of things that we'll see in a few more minutes. And that's your MTDC base. Okay. Now, so maybe we started with $1 million, and then now you work down, you've got a couple small subs, and now you're down to this base, this sticky part that I talk about. Your base is $800,000. Okay. You get an automatic $80,000. 10% of 80,000 of 800 is 80. That's your 10% de minimis, effectively to do what you will with. Okay. Now, some people think it's profit. it might be, you can't earn profit under under an award or subaward, but given that it's not audited, you have a lot of flexibility what you can do with it. Okay, again, it gets a bit complicated, and I'm limited in time here, but happy to carry on afterwards for de minimis questions. But maybe wait until we get through that module and then see where we go. Okay.
Okay, so the next 1, 2, 3 questions is regarding, so we're going to skip that until we get to the de minimis, and
Okay.
we've gone through that, and then so the next question would be, we have been getting awards from USAID. However, the funding has been declining ever since, even after signing the agreement. What help can we get from this kind of situation?
Okay, well, I mean, generally an award is for 5 years, and the intention, obviously, when you proposed and they gave you your initial award, to carry out the project. If for some reason COVID, right, we couldn't do testing, or we couldn't do treatment, or we couldn't do something for many months or years, it's logical that money could be re-obligated to do something else, maybe other parts of the world where they don't have certain issues. So I can't say if your funding's declining. I tell you one thing though, there is an incredible amount of attention on performance. Okay. And they've added new rules in the uniform guidance at 302 if you're on the USAID side. And it forces, sorry, it's 202. It forces the agencies to design into every program deliverables that can later on be measured. The measurement's under 301 in your standard provisions, okay? But at 202 in the US, the pre-federal award requirements, they've got to create programs that can be measured. Now, I can't certainly say whether your award has been successful or not, but if you're not performing, yes, you certainly, there's a strong possibility that they could move those funds to other better performing organizations. Good question.
Okay, so one last one. The others are all about the de minimis, so we'll just do this one and then we can move on. We are currently having an award running, but we are only told verbally by the prime about the cut of budget. Should we in future insist to get the written amendment to the contract?
Okay. So Catherine mentioned that in the new year, under the FPD scholarship program, we will have a course on what we call capture management. And it's very important for all of us to realize, yes, it's great to be in a consortium, but it's not great to be in a consortium if your prime is mean or is not easy to work with. And so it's important to realize when you sign your agreement, so when you agree to team up, your teaming agreements, you subs, unless you are totally weak and totally a taker, if you will, if you have no authority or power, you really can't fight for your rights. But I think it's fair for everyone in a consortium to have some sense of that. I need to be able to understand if you're going to cut our budget, why? Are you cutting us out to give it to someone else or whatever else? So I mean, that's just like dating. I mean, it's always give and take and things like that. But you do want to set some rules before you finally sign on the bottom line to join a consortium. And too frequently, what we call strong primes take advantage of weak subs, and then later on, that's exactly what happens. You don't get what you thought you were going to get. I think people learn over time. You learn your power in a consortium. What is it that they need you for, and then demand your rights. Okay. Anything else?
I think all of our other questions is mostly about the de minimis.
Okay, we'll get to the de minimis. It's always exciting, and I hope you all get a little bit more money going forward. Hard to go backwards. Okay, so it's important to know that I've talked about rules, and the important point is that all the rules don't apply to everybody. So here, what I've taken is a more complicated discussion and dumbing it down to, let's just look at what's likely to happen to those of us on this webinar. And it's going to be USAID identifying a foreign prime, right? As Catherine said, the goal of ASAP and the goal of USAID is to have 70% of the spending go through local partners by last year, hopefully by the end of this year now, okay? So there's a push on for you to become competent to spend the money correctly. So what's going to be in your award, okay? What's going to be, USAID gets a non-US foreign prime. What's going to, your award is the document, right? Your award has in it I showed you the schedule A, B, C, D. Okay, and that's it. That is it. Now there's other attachments that we'll refer to, but that's your award. So the bottom line is for non-US organizations, you must follow these standard provisions, which we're going to talk about next, and the cost principles. That's the first thing the standard provision number 1 says. What applies to you, non-US organizations, is not the entire uniform guidance. That applies to US-based organizations, the IntraHealth, the FHIs, right? It doesn't apply to you. What applies to you is the standard provisions and your award and the cost principles, okay? So we have to be aware of what applies to us. And at CDC, there's no light version. When I say light version, what USAID did, they took, when the uniform guidance came out, every agency was authorized to amend what applied to their recipients effectively. And USAID took that opportunity and said, we're not going to apply the entire subpart D or the 300 section, post-federal award requirements, overseas. What we're going to do is take everything out of the uniform guidance that we need, and we're going to put it into the standard provisions, which we're going over next. Okay, so I call it the light version. You've got Coke Light, you've got provisions light that you must learn. Okay, same thing then goes what happens to a non-US sub. They get the same thing as the prime. So the prime, a foreign prime, will pass down the same sub award with the same non-US provisions and the cost principles to the subs. Okay. So here is what's going to be in, okay, I'm jumping through now to complete the exercise. I'm assuming you won your award. Congratulations. You got your 10% de minimis. You know the cost principles. You're spending the money. Now what? Okay. So at your audit time, I'm going to spend 5 minutes talking about your audit and getting through your audit. What's going to happen is you recipients now must prepare your own, what's called a CFA. It used to be called a FAS. It changed on August 22nd to Schedule of Expenditure of Federal Award, CFA. That's the new term for FAS or Fund Accountability Statement. Okay. And so you have to prepare that, and we auditors are going to audit it. So if you're not capable of doing this now, maybe in the past recipients, you had help from your auditors. What you need to do is reach out to another organization, preferably in your country, to help you prepare your CFA. Okay? We auditors can't prepare your CFA anymore, and we can't prepare your cost share schedule. Okay, and so we're going to audit your CFA. A CFA is like an income statement, and we'll audit that. We are going to we're going to review your internal controls and have a report. We're going to have a report on, did you comply with all the terms and conditions in your award, all those 300 that I talked about earlier? And if you've got prior recommendations, we will be following up to see you fixed what last year the auditors told you to fix. Then you might have a cost share report. Very rarely is this audience going to have indirect costs or the NICRA. Okay, so that's just a high level of what that is. Here's what the classic fund accountability statement looks like. If you're taking notes, realize the new guidance for you implementing partners on preparing for your audit it's under ADS 591 lowercase MAA, lowercase MAA, okay, 591 MAA. Go to the USAID website, you can get it there. Send me an email afterwards, I'll send it to you now. But it's the rules for your audits. Okay, so basically your job, auditor recipients, is to create your, we'll call it the FAS here, that used to be called. And what's your budget for your fiscal year? What did you expend in your fiscal year? And that's what you must give the auditors. And then we will take this and we'll decide over on this side here, are we going to question any of your costs as either ineligible, meaning unreasonable, or you incurred money on things that you weren't supposed to, like alcohol, bad debts, entertainment, certain things. Those are ineligible. You'll pay those back. Or we'll question when you don't have adequate supporting documentation. Okay, that's the job of the auditor. Okay, now incredibly briefly, I'm just going to go through conceptually what our structure as an implementing partner is and versus the auditor. So for us, we have our leadership of our NGO. We have someone, again, this is just theoretical. We've got someone, I say the FD, with the person who's responsible for managing the finances and probably related to the audit. She or he's going to be driving the audit under them. Okay, then you've got your mid-level HR, accounting, whatever, technical people, and then so forth, your clerks. Then over on the other side, you've got your partner. And again, I was one for 24 years, still am a partner with our own sustainability solutions, but you'll have a manager. So I understand the role very well. a manager under the partner, a senior under the manager, and then you'll have a couple clerks, the new guys. Okay. The question is, how do we work together for an efficient and effective audit? Okay. And in our full-blown courses, hopefully that they'll fall into the scholarship program. What you have to learn is you need to learn that we need to communicate regularly. Okay. When Sustainability Solutions does our audits, we audit under a no surprises rule set. No surprises. We will never surprise you, recipient, with your with what we're finding. Okay. Your job, recipients, was to play by the rules. You hire an auditor. You got to hire a good auditor, preferably from your local country, and they'll be on the new USAID lists, which you should be able to get from your controller's office. They're coming out now. Okay, but find a firm that's going to work for you. Okay. Generally, people say, oh, I'm going to go with the cheapest one. That is the bad move, right? Because you get what you pay for in audits. Historically, the Inspector General wrote that costs cannot be the determining factor for selecting your auditor. Okay, that's no longer in the guidelines, but that's a pretty good idea. If you go cheap, you're going to get a cheap auditor. They may blow it. You'll have to end up paying for it, and the audit, and then you're going to have it redone. Okay, so all I can say is the important point from this one is make sure when you're hiring your audit firm, get to know, is the manager competent? The manager, that's who you're going to be working with. You don't work with the partner very often. We attend the entrance conference, planning, which you don't see, the fraud discussion, exit conference, report writing, but you don't interact with the partner. You interact with the manager and the senior. So what you should be doing when you're reaching out to your auditors, ask to have a webinar. You say, who is my team? I want to know if the manager is competent. Okay, that's the bottom line on that one. Okay, so let's kill the final questions from this segment, and then we'll move on to the next. I see I'm getting a little bit behind, but let's go with the questions, please. We'll knock these out. If they're not at 10%, we can wait till the next section. Okay.
We did have one that came through the chat. I'm not 100% sure if I've got this correct, but we can have the person clarify if need to. So they're asking if the LIP can use their funds after reaching milestones for payment of any debts that were contracted in the past while setting up the LIP office. So they're having a FAA award and they do not have a 10%. So how do they do it?
Yeah, okay, well, that's a good question. And as I said, send me your email, I'll send you the digital pack. But conceptually, when you set up your fixed amount award, that sounds like it doesn't matter if you're a prime or a sub. Okay, when you set it up, you agree on what we're going to incur costs on to deliver the milestones. Okay, now USAID is quite not generous, but they're quite understanding that, because most people with a fixed amount award are going to have cash flow issues, they do enable it to be sort of pre-funded. Like your first 10% payment is going to be a delivery plan, things like that. So you generally won't be burning your own money under a fixed amount award. But the bottom line is when you get to the end of the deliverables, the milestones, if there is still money left, that is in theory your money. Okay, and again, they're not audited, so an auditor will never know what you did with those monies. But conceptually, for the U.S. government, when they fund an activity, they expect it to be funding that particular project, especially in that fiscal year or period of the fixed amount subaward. So, I mean, is it ever going to get caught? No, but conceptually, you would have maybe amortized those startup costs in the fixed amount award. You could have said, no, well, we had to set up an internal control framework. We had to set up separate bank accounts and all this stuff. And if you can justify it, then when whoever gives you the fixed amount award, they have a chance to to discuss, let's say, not see necessarily, but they have a chance to discuss, why do you need this money? Once it's agreed, get paid based on milestones. Okay. Okay, you know what? Let's move on to the next slide set, since you're having a lot of great questions. And okay, what I'd like you to do, please, and maybe someone monitor the chat. But no, let's do this. Okay, what I'd like to know, just for understanding what to say to you, I'd like you to put your hand up into 4 different categories. Okay, first put them up, then we'll say put them down. I want to know, are you a prime organization with a sub, or am I just a prime organization? I'm a prime recipient, or I'm just a sub recipient, or I'm other. So I have a fixed amount subaward or something like that. Okay, so I want to start with, put your hands up if you are a prime recipient and you have sub recipients under you. How many of us have are prime with subs? Okay, quite a few, more than 10% of you, well, more than 10% of you are primes with subs. Okay, and still going north. Very good. Okay, that's quite an important thing to know. Great, put your hands down. How many of you are just a prime recipient, but you don't have subs under you? I'm a prime. Okay, hands are going up. Noting this. Okay. Okay, that's good. Put your hands down, please. I know you may be a prime and a sub in many things. Then how many of you are sub recipients hoping to become a prime in the very near future? I'm currently a sub, but God willing, under ASAP, I'm going to get a prime award. Okay. Okay. Numbers are going up. 2 more seconds, please. Okay, great. Then how many of you are other? I've got a fixed amount award, fixed amount sub award. I'm not a recipient yet. I'm a wannabe. I'm going to be, hopefully. How many of those do we have? Okay, I'm getting a lot of non-responses here, but that's fine. Okay, okay. That's good. Okay, so that gives me an idea of how to let's just go here. Thank you for that. Let's go then into our next slide pack. I'm going to stop sharing that and let's reshare. Let's get a new share up. Okay, let's go. Okay, so here what we have is going to be the standard provisions for non-US NGOs. Can someone put your hand up if you can see standard provisions for non-US NGOs, please? Great, fantastic, thank you. Okay, so let's jump into this with the time we have. Okay, I've said standard provisions change over time. Okay, so you need to be aware of what's in your award. When an agreement officer creates an award, she or he must incorporate or include the most current version. Okay, so yours right now, if you get a new award now, you'll be getting the one from, happens to be August or so, March 31st, which had the change of the, what we'll call it, the Mexico principle. Okay, that's the current one. And so the standard provisions, part 1 is mandatory. The second part is what's called required as applicable provisions, which don't apply to everyone. It depends if you do certain things, the agreement officer crafts your award and puts in the appropriate provisions. Okay, I did say earlier, let's focus on the second point down here, that there are many musts that you're expected to comply with. As auditors, we are supposed to test all of the ones that could have an effect on your financial statements. Okay, so there's some pretty obscure requirement to post stuff in the document experience or development experience clearinghouse and other sorts of things which are always going to be non-financial. Okay, so we auditors may ask you, are you doing this? But when it comes to the important financial things, are you doing timesheets? Did you do procurement correctly? How about your travel? Those we will certainly test. Okay, so you need to be aware, your compliance person has to learn what are all these musts. I showed you this before, right? We talked about who rules apply. So the mandatory standard provisions for non-US organizations gets this special document, which you'll apply and we'll test you on. Okay, here's what they are. We certainly don't have time to go through all of them, but many of these are very important. Some of them are less important. As I say, look at M8. You're supposed to submit stuff to the development experience clearinghouse. Well, is it important? Yeah, it's like a knowledge management portal. I mean, I've been there many times trying to find stuff. I don't think it gets populated very easily, but certainly when we say about 1 and 2, what's allowable cost, how you're going to be audited. 3, amendment of award, very, very important. Okay, so they just go on, and then we go to the second section, which we don't have time for today, but the required as applicable provisions, which you'll see down here under RAA 5. Sorry, let me get my pointer working again. RAA 5 is the one on the 10% de minimis. Okay, we'll spend a little bit of time on that under 10% de minimis. Okay, so the very first one, which is very important, notice what it says under A. Okay, the recipient will be reimbursed for costs incurred to carry out the award in accordance with the terms of the award. Read your award and the applicable cost principles, as it says below, 2 CFR 200.400. That's it. This is your rule set. You don't have to follow all the rules that the US primes do because you have the light version. Okay, so you need to read your standard provisions and read your award and know the cost principles and then spend the money correctly. Okay, this M1B is very important. And if you're taking notes, this correlates to the number 407 in the cost principles. And what it says is you should be able to recover all your costs that are reasonable, allocable, allowable. And if you're not sure, you have the ability to ask your agreement officer to confirm whether your costs are going to be allowable. Okay, so I've worked with many agreement officers. Pretty much we've agreed that the time to do this, recipients, is when you're doing your budget, your initial budget. You should have a column there in your cost proposal, a column that says, is this cost specifically allowed in the cost principles? Great, then you don't have to worry about it. But if it's not specifically allowed, that's a gray area. And you should say, I'm planning on having data for my community care workers out in the field, $10 a month in data. It's not a cost principle. Okay, is it allowable? Is it reasonable? $10, probably. Allocable? Well, which projects are they dialing in on? And is it allowable? Well, it's not specifically disallowable, so it could be. But let the AO confirm, yes, it makes sense that those data costs of $10 a month are allowable. Then no gray areas, you get a clean audit. Okay, part 2 just goes on to, again, I certainly, even in our longer courses, we can't go through all of this because it's 93 pages, but still it's not too hard to read. Let me just say this, when the uniform guidance came out, I don't have my slide here, but there was only like 18 pages of the 300 section, okay? And so I think you owe it to yourself and the US government to read 18 pages of rules and regulations, okay? That way, I want you to be bulletproof, okay? Now notice here, there are things about how long you have to keep records for. So you must follow the rules of your country and the US government. In most countries on this webinar today, I know, having worked with you and your auditors, that most of your countries have a longer requirement to keep the US government, all documents. Okay, it's like 5, 7, 10 years. Some of you, we had Thailand on last week, theirs was 10 years as well. And so please, you need to keep your records for both US government purposes and non-US government, and just be aware of that. So here is where it talks about the audit requirement. Organizations that spend more than $750,000 in your own fiscal year are subject to, well, that's what I said, ADS 591 MAA. And USAID will provide those to you. They're called the USAID audit guidelines. Okay, number 3, very important. This is where I said, don't get caught out by listening to the wrong person. Your AOR may be the best person in the world. They love you. They want you to be successful. They don't have authority. Just be careful. Okay, so you need to receive prior written approval from the agreement officer. If you're going to change your scope or objective, you're going to have an amendment. Change your award, the total amount of the award, amendment. Additional funding, obligations. US government may plan to give you $20 million over 5 years, but they obligate it in chunks. And those obligations can only come from the agreement officer. Okay, after this, some of these things could be delegated down to your AOR in the designation letter. Rule number 2, read your agreement. Rule number 2B, get the designation letter and read that as well. That tells you what power and authority your AOR now has. Okay, important point, the third bullet point here is quite important. People don't realize how flexible the US government is to enable you to move funds between direct cost line items. Okay, the concept is that let's take an easy example. Your 5-year award is going to be $10 million over 5 years. That's the plan. So 10% of $10 million of the entire budget is $1 million. You recipients have the ability to move money between your direct cost line items up to $1 million without prior approval. So people say, oh, I can't afford this. There's no budget for training or no budget for internal controls. Guys, if the money's sitting in one line item, you can move it to another one. Obviously, be careful moving money if you're not going to have enough in total. But the ability to transfer funds between people say, oh, you can't work overtime because you're not in the budget. Wrong. You've got $1 million to move between line items and budgets. Okay. Okay, do we have any questions on this so far? See, we've got 10 questions.
I think about our first 5 are specifically on the de minimis.
Go for it.
So do we start on the de minimis question, or do
I would
we
start
move?
on, is there an approval TOR template? Start with that one at 319. We'll do 10% de minimis
Okay.
in that section.
Okay, so the question was from Susanna. Is there an approved TOR template to request the audit?
Yeah, absolutely. So the TOR template is in ADS 591 MAA, and it is chapter 4. Okay, also the mission would also possibly send you out. Okay, Lilani, do you want to answer as well? Lilani is one of our famous ASAP people from Namibia, superstar. Go for it.
So I think in the past, I've also just been using some templates that we adapt according to what we needed. So we
there's definitely an audit template. And remember, your auditors know this like the back of our hand, because we're not going to get paid unless we do the audit that we know you require. So yes, you get a 20-page checklist, and believe me, you put that in the contract, and then you're going to get a compliant audit. Okay, good.
So we've got 2 questions that's going on that's regarding G2G. So I'll do the first part, and then we can answer that and go to the second.
Okay.
The first part is under G2G, there is a cost share or host country contribution but government entities have a challenge of reporting this cost share. Is there a template for government entity to use to report the cost share, mostly in-kind contributions?
Okay, yes, there is. Again, under the old OIG guidelines, and again, send me an email, I'll send it, just tell me what you want. But there are 2 different types of cost share reports. One is called life of project, and one is called annual. Okay. And more often than not, agreement officers put in a life of project, meaning over the course, let's take our last example, you're going to get $10 million over 5 years. And you have a cost share requirement of, it used to be percentages, now it must be in a number, used to be 10% generally. Now they'll say, okay, we're giving you 10 million, we want you to come up with 1 million. Okay, and so you have to, and in your standard provisions, there is certainly a pretty deep, I mean, we may even get to it here, I'm not sure what I edited out, but yeah, you have to be able to document your cost share. And more often than not, it is other people's money, or it's not direct money, it is vehicles, nurses, doctors, hospitals and clinics, that kind of stuff, out of pocket, costs that are being donated. There's no problem that. So the only thing you've got to realize is which award do I have, life of project or annual? And then in there, in the old guidelines, it's not in the new guidelines, funny enough, but under the old OIG guidelines, it shows you the correct format for both situations. Okay, pretty straightforward. You should not have problem meeting cost share. If you do, the first thing you need to do is let your agreement officer know that we're not going to meet our cost share. Okay, it's important, if you can't meet it, request that your award be modified. Excellent question. Next question.
So also under, sorry.
Go ahead.
So also under G2G, are host government entities expected to prepare fund accountability statements? If so, are they not expected to use their PFM requirements since it's G2G?
Okay, well, a PFM, Public Finance Management Act requirements, that would be probably, you probably have to prepare your schedule of expenditure maybe under that, meaning how do I expend it? But the bottom line is your FAS or CFA now is very, very, very much just the project that U.S. government's funding. They don't want to know about your other stuff. There's no balance sheet. There's no cash flow statement. How much did we give you in U.S. dollars? Most awards are in U.S. dollars. Okay. And then your CFA should be in US dollars. You might have a local currency version as well, okay, because you spend local currency. But at the end of the day, your CFA will be, what did you do with the US government funds that you received in that fiscal year? Okay, good question. Next.
So the question here is, our cooperative agreement with USAID is by US dollar, in US dollar, but we receive by local currency. Is it need another discussion or approval to receive by US dollars?
Okay, so from the name, I can see this would be in Ethiopia. Generally, the US government provides funding in US dollars, and then we convert it to local currency. Certain circumstances when there's like a PL 480 program where maybe they're bringing in food and converting it to local currency, the US government sits with millions and millions of dollars of local currency. they can fund you in BRR. But in general, your award will be in dollars. You convert it to BRR in your situation, and then you expend BRR. And then when you do your end of year CFA or fixed amount or fund accountability statement, you convert those BRR back to dollars. And that's why you need to use different methodologies. Normally the weighted average method, perfectly acceptable. That's what we use. And it tends to work pretty well. So normally all of you will have a US dollar CFA and a local currency CFA as well. Okay, good question. Next question,
Next
please.
question
On
is
10%.
on the prime. Go ahead, Doug.
Okay, anyone else? Okay,
There's another question.
Okay, give me one more question and then I will try to move on to the next slide set.
Okay, great. This question is asking, say that I'm a prime with a sub. My question is, last year in October, we filled the particulars of our sub through FSRIS form. Is it required to be filled each year? So that's the question.
Oh, read that one again.
Okay, I'm a prime with a sub.
Yeah.
My question is, last year in October, we filled particular of our sub through FSRS form. So is it required to be filled each year?
Good. Okay, so FSRS, as we're going to see, is every time any organization, prime or sub, receives more than $30,000 of obligation that has to be reported into the FSRS system. Okay, and that's just where it's a transparency system. And if you go to USAID spending, you go to Health and Human Services tags, if you go to foreignassistance.gov, these are all websites where we can see how much money organizations have been expended and spent. Okay, so yes, FSRS is a requirement under the standard provisions for every time you prime obligate more than 30, it used to be 25, now obligate more than 30, that has to be entered into this transparency system. Okay, great, guys. I tell you what, ask one more question. I'm going to stop share and I'm going to get up the next, so I'm going to get up the next thing that I'm looking for here. So you carry on. Question? One more, I'll take one more.
Okay, so in PEPFAR funds remaining in the budget on September 30, 2021, can carry forward to implement remaining activities in the next fiscal year?
Yeah, okay, that's a good question. And, carry forwards, okay, is cost principle showing yet or no? Possibly not.
It
Carry
is.
forward. Sorry, cost principles, is that showing?
Yes.
Okay, so yeah, the concept is that under PEPFAR especially, and I think most of us are under PEPFAR, I think USAID is pretty interested in making sure you spend your money each fiscal year. Okay, but certainly carry forwards have been allowed in the past. Anything's potentially allowable if your agreement officer approves that you do carry it forward. Yeah, CDC, funds are almost always carry forward because rarely do people spend the money in their current fiscal year. They always tend to be slower. Okay, so all I can say is ask your agreement officer. There's no hard and fast rule on that. Ask your agreement officer, can you carry it forward? Please. Also, be sure you ask early. You can't get to like the end, you can't get to October or September and say, ooh, we've got 20% of our funds unspent. That's what your AOR should have been doing, monitoring your burn, your spend rate, so you do spend the money. Remember, the US government doesn't give you money because they want to take it back. It's harder to take back money for them than it is to give it to you. So they want you to spend it. So spend it correctly. Under COVID, obviously there's a lot of challenges, but the bottom line is it might be allowable. Okay, so here we're in the cost principles. I'm cognizant of time, and we are going to take a break after cost principles for 5 or 10 minutes, just to give you a break period, and then we'll come back for the final session. So the concept of cost principles, as I said earlier, is any cost might be allowable if it's reasonable, allocable, supported, and not specifically disallowed. Okay, so we're going to see some things that are disallowed, but so the bottom line is when you do your budget LIPs, make it very, very clear what you're asking for. And we call it activity-based costing. Try to, and I think we will have, I think with Catherine's ASAP and with FPD coming up next year, we will have a course on what we call capture management. which is the whole process of teaming agreements, preparing your budget and things like that. So important. If you don't know what you're asking for, and if you don't ask for it, U.S. government's not going to give it to you. Okay, so you got to help yourself make sure you get all the funds you're going to need to be successful. Okay, so many of these are or are not listed, but the bottom line is you must know and justify why you need the cost you need. Okay, so we've already gone through 403, 4, and 5, which is reasonable, allocable, allowable, and it also covers supported. 406 is discounts, rebates, refunds. All discounts, rebates, refunds belong to the project. 406. So if it's buy two, get one free, the third one isn't yours for free. It goes to the project. You know, if you only need to buy 2 computers, then, you know, work a deal with the store manager not to have a third machine that you really don't need and you don't want to pay for. It's never buy 2, get 1 free. It's always obviously you're paying for something somehow. Okay. 407 is where I said to you, this is the catch-all, very useful principle that again, it was under M1 under the standard provisions earlier. I said you cross-reference it to this. So this is where you are allowed and encouraged to get certainty on whether any of the costs that you're going to incur require prior approval. And there are many. I've just listed them all here. We don't have time to go through them all, but they are sort of numerical as they would be in the uniform guidance itself. So here to have fixed amount of awards or subawards, you need, or subawards. If a prime is going to have a subaward, that needs prior approval. For cost sharing, I'm not going to go through all of these, but you can go to 306 here. And we did. We created a whole slide pack for this. And cost sharing or matching. Some part of cost share needs prior approval. Program income. There's 3 methods for prior income. You earn income, you add it to the program, you use it for cost share, or there's the deductive method, right? So that's what's going to be in your award. Read your award. I showed you, in that in the schedule, section A, it's going to define all of these things for you. Okay. And so forth. Revising the budget. We just saw this under under provision number 3 and so forth. So all of these things, I use this as a cheat sheet effectively. As an auditor, I say, okay, I say to my team, guys, all of these things require prior approval. Team, all these things require prior. So if our client that we're auditing has any of these things, and I'm sure you all have compensation, I'm sure you've got fringe benefits, I'm sure you've got equipment, did you get the right prior approval? So recipients, you use this as your cheat sheet or your compliance sheet and make sure that you do get approval for all of these things. Exchange rates, right? Look at the Kwacha in Zambia. The Kwacha has gotten much stronger with the new government. The guys are saying, we're not going to have any more money, right? The Kwacha was at 25 and now it's 18 or something. They've lost 30% of the value, or the local currency's gotten stronger. Your awards in dollars, so they're not going to have enough money. What are we going to do? Go get approval from the agreement officer to either give you more money or reduce your program. But again, you have to be aware that all of these things, there's a rule for it. And these prior approvals, there's a lot of these. Okay, so 12, 13, and 14 have to do with classifying costs. And the most important thing from 412 is the very first sentence, which says there's no universal rule for classifying costs as either direct or indirect. And F&A means facilities and admin. Okay, so you can have very different ways of accounting, but as an auditor, I'm looking for consistency. That each year you're not moving it around because you've got a new award or you lost an award and you're trying to jimmy the system. So you're going to take advantage of the US government. Okay, so set up a system and then stick with it and get it approved by USAID and generally you'll be okay. Okay, so again, we have 0 time to go deep into this, and indirect cost is a complicated session. At the end, at the next slide pack, I think I'll have some on this, but the bottom line is there are costs that we would deem to be, okay. One thing you need to realize, okay, when they created the uniform guidance, okay, the uniform guidance was not created with foreign operations in mind. Okay, the uniform guidance applies to the entire spending of the US government, the $4 trillion they spend every year. So when we think about indirect costs, what you need to realize is in the States, anyone who wishes to get a NICRA can get one. Matter of fact, you're expected to. If the US government gives you a contract or an award in the States, then they're going to give you 6 months to calculate your indirect cost rate. But we don't have that here overseas. So when we get into, and now we're into the cost principles, you need to realize that 99.6% of US government funds are spent in America on Americans. Okay, Health and Human Services itself, when I did research before COVID, of the US government budget, $1.4 trillion was going to be spent by Health and Human Services. That's what is it? It is $1,400 billion. It's a lot of money. Okay, so the bottom line is these rules are created in mind with the US concept, but they apply to us overseas. So, a lot of times the terminology, you're going to say, I don't get an indirect cost versus a NICRA versus a joint and common cost. That's why, indirect costs itself is a complicated idea, and we can't cover it in 20 minutes. First of all, let's start with the concept. There are many, many, many US government rules. So the first rule to learn is learn the ones that apply to you by reading your agreement. Okay. The second rule is that of these rules, some of them, they're voluminous, but they're not difficult. But they will take extra attention from someone in your group. So procurement is one, timekeeping is one, travel is one, equipment is one. Those are things that you're going to need a specialist to help for all of your projects. So when we're working with NGOs, we suggest that that's someone who's not necessarily going to move on if and when a project finishes. Now, of course, if you're only a one project, one trick pony or a one project organization, someone in the organization has to become that specialist. But we recommend for the larger groups, have someone who's going to maybe be in the internal audit group or the compliance section to learn these additional requirements. And then there's the hard to learn stuff, which is indirect costs. And that's the section we're in now. Okay, that takes actual study. And we recommend to the auditors and recipients, have one or two people in your organizations learn about indirect costs. Auditors, we recommend have it be a manager or someone who's not going to move on after the senior gets his articles and decides to go get a real job. Okay, I mean, auditing, I think, is a real job, but many people think, no, I'm going to go get a real job. Okay, so let's talk about here that so someone in your organization needs to learn direct costs. And the concept, the very simple concept is, as I said earlier, costs that must be incurred specifically for a project would be direct costs. Okay, so I said the 1,000 test kits or male circumcision kits, or I need 10,000 test kits for care and treatment, or I need 1,000 doses of ART or AR antiretrovirals each month for my people. Those are costs specifically for that award. Easy. Okay, it's the indirect costs that would be at 414 where it gets complicated. Okay, so 414 is where we would go, and the concept here is that I did talk about a NICRA, negotiated indirect cost rate agreement. Let's just go to the end here and see if I've got. Okay, no, I don't. We can't get into it, but the concept here is that the federal rule is every agency must accept if another agency creates a NICRA for a partner. Okay, so there are many around Africa. I think I'm aware of, I think it is AMREF that has a NICRA. In South Africa here, we have 3. We have Broadreach, we have Mothers to Mothers, and we have Right to Care. They all have USAID NICRAs as a foreign organization. But here's the rub. CDC is not recognizing them and accepting them. And so this is the problem, okay? They're saying, no, we're not accepting these overseas. So you just need to be aware that the indirect playground is fraught with some challenges. And if you're gonna play in this space, you truly need to learn the rules, okay? Okay, so let's get into, so we're gonna cover 414 when we talk about the 10% de minimis. That's all the time we have to talk about today. Okay, let's handle some questions if we have any so far on this topic. Cost principles, before we go into the exact details of which cost principles you may or may not. Okay, let me just knock out, I'm looking through here and I can probably knock them out easier than our readers, but where can we get instructions for the preparation of the CFA, the new FAS? Thank you. Okay, that is going to be in your audit guidelines, ADS 591 MAA, okay? The 10% budget flexibility is on the 5-year budget, not on the current year budget, correct. 10% flexibility is on the total life of the budget, but it is not as many times, but it's cumulative. So you move 100,000 one way, then it counts. You move 100,000 the other way, you move some money to salary to equipment, you move training to something else. Each of those adds up. Once you get to $1 million, you're done. But you can always do a budget alignment with your AO, and then the clock starts over again. So flexibility. Lalani, do you have other comments on that?
No,
Lalani?
you've covered it.
Okay, sorry about that. I'm not seeing all the time. Okay, yeah, okay, you said that, Lalani, great. What's the relationship between the AO and the sub-grantee, sub-awardee? Any communication channels? No, the AO does not have, the prime has a relationship with the agreement officer. The prime does not, the USAID does not have a relationship at all with the sub. The prime has a relationship with the sub. The prime's responsible for the money they pass down to the sub. That's why they can micromanage the sub. And but there's no relation. It's only in a fraudulent situation where the sub has any expectation to contact the US government. So that's not in this course, but since you asked, so a subrecipient that has fraud has to notify the IG in Washington of the fraud, and they must notify their prime, the AO at the prime. Okay. So that's that one. Maybe you guys can tick these off as we go. Which standard provisions is the FRS outlined on? It is in, I'll tell you right now. I think that's going to be in the required as applicable. If you delegate funds down there, but that's going to be in both. I'll look at it at the break. Okay, if a local partner implementing under direct cooperation with USAID receiving 10% de minimis, is it allowable to charge to its sub award? Okay, everyone at the prime or sub level gets a 10% de minimis. Okay. Okay, who in USAID approves annual budgets and work plans? I can't answer that. I think it would be probably the AO there is a group who would normally be the, what do we call them now? It's a new term for them. But I'll leave that to Catherine or someone else to talk about who approves annual budgets and work plans. Certainly the agreement officer is the one who's going to put it in writing to you to say, congratulations, here's your budget.
Doug, I can answer that question. So
Thanks,
your
Catherine.
agreement office representative or your activity manager, they approve the work plan. So you submit the work plan. There's usually a little bit of back and forth with the budget and the work plan. They approve it and they let the agreement officer know that they approve it. So in the circumstance for ASAP, once we get our work plan approved with all of our consultants and staff, we can go ahead and hire. We don't need any further approvals. So it is your agreement officer representative, the person that you have the closest relationship to at USAID. Thanks.
Great. See, Catherine knows everything, right? If I can't get it, Catherine knows the answer. So that's why.
So we also had one question in the chat. Can we transfer amounts from one budget line to another in a fixed amount award, for example, from supplies to program cost?
Okay, so in a good question, but in a fixed amount award, there will be no budget line items. There are deliverables per milestones. Okay, so I mean, fixed amount awards are meant to be very basic and fundamental. And normally it's exactly for that, where you can define what's going to be delivered under a deliverable or a milestone. So, if there's, you can't buy it, there's a lot of limitations. You can't be buying significant equipment and other things under a fixed amount award. So yeah, read that. That is it. Well, again, if you send me an email, we'll happy to send you the digital pack, and it's straightforward, but you do need to follow some rules. Good question.
They also
Another
have
question.
one. Sorry, go ahead, Abdallah.
So there's another question, which is under G2G, will they require prior approval since they are required to use host country procurement system, laws and regulations?
Okay, so under G2G, I think there's going to be a lot more. Okay, here you go. Abdullah, would you answer that question, please?
Should I repeat?
No, it says you'd like to answer the question. Are you going to provide the answer?
No, I wanted to remove it once you have done
okay,
it.
that's fine. I think there certainly will be things that USAID would like to approve under G2G as well. And frequently that could be like procurement of certain things. And I think maybe salary levels. And there's many rules under G2G that most of us don't see. So Catherine, any comments on G? I know you're sort of a G2G, had some history of that, please.
Thanks. So USAID is embarking on more G2G agreements. And what we've seen is that they have milestones, just like a fixed amount award. The ones that we've been crafting, we've made sure that upon signing or within the first 30 days, they have a significant amount of funds available to them to hire the staff. So there is a risk assessment that is conducted for the G2G agreement. And so it follows the funds that USAID transfers usually to Treasury, and they follow the funds all the way to perhaps like the paycheck of the contract worker that they are hiring for a district. So all the rules and regulations for NGOs apply to government. I think that the biggest difference is that we are truly using the government systems to funnel the USAID funding. And there is an expectation that the Treasury and the country will be able to absorb these costs moving forward. So just to reiterate, there's a risk assessment, just like a pre-award survey that NGOs have to go through before getting money from USAID. This risk assessment is different. It has high impact probabilities for risk instead of the scores of 1 to 4 that Anupis does. So we will have a webinar on G2G. We've had several, and we will have another webinar on G2G. Thank you for the question. Over.
Great, thank you, Catherine. I'm cognizant of time, but any things that I see a number of have to do with NICRAs and 10%. We will get to that. I think they're better answered after the next session, but anything else cost principle related or just general non-overhead rate? Please, let's take a few more.
There's another one here. If a subrecipient receives funds for an activity and is unable to justify the utilization of all funds, when are they supposed to refund the primary recipient?
Okay, well, that's a good question. So, I mean, just like USAID funding a prime is only going to fund a subrecipient for the money that they need to spend in the next period. So, and we'll sort of see some of this, and it'll certainly be in the future webinars on subrecipient management, the long version. But yeah, I mean, the AOR manages the prime's cash flow, if you will, burn rate, and same thing at the sub level. So a sub should be justifying why they need how much money next month and only asking for those funds. They shouldn't be sitting on generally more than 30 days worth of float, if you will. So yeah, there might be some small returns at the end when a project closes out, but it shouldn't be wholesale, significant money at the end. Good question.
The next one, you had an example of laptops under equipment category. There will rarely be any laptops that cost over 5,000 and above. Kindly explain.
Okay, so the U.S. government defines anything that costs more than $5,000 per item as equipment specifically. However, for computing items, the U.S. government has gone on to say any computing device less than $5,000 may be deemed supplies. And I agree with you. I mean, computers are getting very cheap. I can't see any laptops, let's say, or even desktops that would be more than 5,000. But the whole point on equipment is it depends on what the recipient chooses to set as their threshold. And many NGOs use either $1,000 threshold or a $500 threshold. So for the U.S. government, they say anything more than 5,000 you must have on your asset register. But most NGOs say that's outrageous. That's a lot of money for us. Of course, we're going to keep track of our computers and our generators and our equipment and all of our other stuff. So that's the U.S. government rule. If you set a lower limit for your own organization, that's the limit you use for the U.S. government assets as well. Okay, great. Next question.
So the next one, the donor gives agreement for FY21 and it ends in September 30, 2021. At the moment, the local partners have no funds and the agreement, even for the prime, has also not been renewed. So even the staff contracts has also not been renewed. This is because of absence and dalliance of obligation from USAID. How do you treat this challenge and the cost incurred within this transition?
Okay, So yeah, it's unfortunate, but again, what we need to understand is the US government is funded by Congress, and the foreign obligation process is normally last because, in America, senators and congressmen care about their states, their countries' things. So the foreign ops are last, and there could be what's called a continuing resolution where they're only allowed to spend how much they spent last year, the agency. So here overseas, and Catherine can weigh in as well, but the bottom line is it's allowable. You're not going to see it here, but in your cost principles, it is allowable to have pre-approval for the spending of funds that, you need prior approval, but the spending of funds in this stopgap period where one project's finishing, the new one hasn't started up. The challenge there is where's the money going to come from? Catherine, any thoughts on the funding when an organization hasn't gotten their money yet?
That is the biggest challenge. And for everybody who's joining the local partner meeting tomorrow, on day 5, we have a session where we are talking about challenges that you are experiencing. I do know that one of the questions to the administrator is going to be about this topic, and your voices are really important for USAID to hear that if you don't have the money, you cannot be expected to implement.
Yeah, it's very sad when we have people on care and treatment and, you hate to say, sorry, we can't spend the funds. But yeah, that's where, as Catherine says, not only tomorrow let them know, but you should be letting your AOR know when you're running out. Well, they'll know when you're running out of money. But when the program comes to an end, if you aren't able to continue, they need to be made crystal clear what the ramifications of that are. So you're not blamed. And well, obviously the program needs to continue, but it shouldn't be the NGO's problem in the public that you don't have the funding. Because
one way to engage in that conversation with USAID in your monthly invoices that you send through is to also attach a budget variance analysis, so you can show funding that you've received, funding that you spent, remaining funding, and the challenges that poses. The more times that you illustrate this, the sooner USAID will be better at resolving this issue. It's really important to have your voice heard if you're having challenges with accessing the funding. Thanks.
Thanks, Catherine. Any other questions for this section, or can we
Just
carry on with the
more, maybe just one more?
Sure.
I think we had somehow answered it before. Maybe we can just do this one.
Sure.
The movement of money, 1 million limit from one budget line to another without approval is limited to annual budget or across the entire project span?
That's for the entire project. Okay. In theory, on day 2 of an award, you can move, in our example, you could move $1 million between salaries and something else, in theory. But then you're done, right? Then you'd be done for the whole project. So no. So most people basically they get started and they realize they under budgeted something and over budgeted well, that's it. So they need, frequently people don't realize, oh my God, we needed 4-wheel drive vehicles versus 2-wheel drive. So we budgeted for 20,000, but now they're going to be 40. So you need to move money from somewhere to somewhere else. The big question is, where am I going to get the money from? And you're robbing Peter to pay Paul. But Catherine, I know, again, I defer to Catherine on a lot of these because she's got years of experience both inside and outside of USAID. But what are your thoughts, Catherine, on moving budgets?
So you are allowed to move budget line items around. It's a good practice to let your activity manager, your agreement officer, representative know that you're going to be doing that. You are trying to build a relationship based on trust. So, when we do budget line item changes, my practice with ASAP is I send the documents, the amount of funding I need to move from this line item to that line item. And so my activity manager is fully aware of how I'm moving the funding around. So I would advise having that relationship with your activity manager. When the more they know, the smoother things will go for you.
Yep. Absolutely. And Catherine speaks the God's truth. And in addition to that, the auditors are going to ask you. We're going to say, okay, your budget was X, you spent Y, why? And we're going to put that in the notes to your CFA. The Inspector General expects we auditors to do exactly that. Document changes from budget to actual, the variances. Okay, can we, let's these are great questions. I just want to keep moving on here, cognizant of the time. We are going to take a little bit of break here in a few minutes when I get through this section. So
just sorry, Doug, before we move on, just to clarify that $1 million that these people are, or this person is referring to, it's not necessarily $1 million for everyone and all their agreements. It would depend on what your total award is.
10% of the total award. Now, that's, I mean, I don't want to get too complicated, but total percent of your direct costs. Okay, indirects get fuzzy, but no. If you don't have a NICRA and your award is $10 million over 5 years, in our example, then yes, it is 1 million, 10% of the total budget.
Okay.
And if your budget was 50 million, then it would be 5 million, and so forth. The $10 million budget would be 1 million. So yes, it's 10% of your total budget. Okay, so we're now going to get into the next section of our cost principles. And as I said, there used to be 55, now 56. They added in the new one about not buying Chinese equipment, the Huawei and net something, Hikvision cameras. But the whole point here is the important point that what I have bolded here for you is that if there's a discrepancy between the award and the provisions, the award governs. Rule number 2, read your agreement. I didn't tell you what rule number 3. Rule number 3 is revise, revisit, read your cost principles, where we are here. Because not only do cost principles change, but frequently your award changes in terms of what you're asked to do. I mean, how many of us had COVID even in our vocabulary 3 years ago? And yet, you probably spent a lot of money on COVID, on PPE, on all kinds of things that, are they going to be allowed? Yeah, probably. I have to say USAID is incredibly generous and kind what they've allowed to happen under the COVID this period in terms of salaries and things like that. So, but the bottom line is on this one, the federal award governs. Read your award, play by the rules in your award. Okay, just quickly through some of these that people would not necessarily know. Of course, alcoholic beverages are never allowed. You're never going to charge the project for them. You're never, also, I took out alumni services, but you're saying, I've never seen alumni services. Well, the reason is, remember, I said the cost principles were consolidated 3. They took the state and local government, the A21. They took the A122, which is for non-governmental organizations that most of us used to use, okay? And so in educational institutions. So alumni activities, you say, I didn't know that. Well, they're not chargeable anymore, and I don't think they were then either. Okay, so just be aware that you're going to see cost principles. You're going to say, this never applies to me, but it could apply to state and local governments. Okay, so audit services, just be aware the cost of your audit. We're talking here, possibly you have your statutory audit, which is the audit in your country. Okay, so in Kenya and South Africa here, if you receive foreign funding, then that must be audited under your statutory or normal audit, normal country audit. Okay, the question is, well, who's going to cover the cost of that? Well, USAID will cover only the fair share of that statutory audit. And then depending on, especially, did you have to have it? I was working with one of my old favorite controllers who moved up to Zimbabwe, and we were talking about this, and he said, it's not a requirement in Zimbabwe. It's not a requirement to have a statutory audit. So he says the US government's not going to cover the cost of something that we don't require. So recipients, you all need to learn in your countries, do you have to have an audit, a statutory audit that will include USAID, US government resources, okay? But I'm talking here about generally now the yellow book audit. It's called the yellow book because the rules used to come in a yellow cover before we had digits, okay? So yellow book is the generally accepted government auditing standards. And the bottom line for that is, you can see one here. Well, let's just say if the US government says you must have it, they will pay for it. But if you hire an auditor and they don't conduct the audit in accordance with the standards, then why should USAID pay for it? Okay, hire a good auditor. And so make sure the list that you're going to get from your missions, they have gone through a long process now. you know, the firms that are on those lists should be competent, but still do your homework. Not just is the firm competent, as I said, can you get along with the manager and senior who you're going to be working with day in, day out for weeks, if not months. Okay. One important point we're going to be talking about in the next session on subrecipient management is prime recipients, also called PTEs, pass-through entities. You can charge your prime award for the costs of certain requirements to strengthen your subawardees. And many people don't realize this. And again, when we talk about in the future course on, you know, how to put together a good consortium, realize that you might need a certain partner. Either the US government favors them, or, you know, the deputy chief of party walks on water and you must have that person to complement your consortium, but the organization may be weak. And so what do? Well, it's going to be your responsibility to strengthen them. So make sure you put enough money in your budget, the prime budget, the consortium budget, to strengthen the subs. Okay, so when you're doing your dance, and as Catherine talks about the NUPIS, the pre-award surveys, when you're assessing the strengths and weaknesses of the sub, if they're weak, recognize it. There's no shame in a weak sub. I mean, part of the whole US government role is to strengthen, fantastically, to strengthen these organizations to become primes. But at the sub-level primes, you are responsible. So what this goes on to say, that you can charge your prime award to strengthen your subs, but it's only allowable if the strengthening is conducted in accordance with GAGAS attestation standards. What does this mean? Okay. This means that in theory, you should be using an audit firm from your country that is on the USAID list. Okay. It can't just be any organization that could do strengthening. It's supposed to be conducted in accordance with certain standards. Next, it has to be paid for by the prime. So make sure there's money in your budget, primes. And third, it's limited in scope to one or more of the other activities down here, which is certainly not audit. It's not auditing. Okay, if the sub's going to have an audit, that money has to be in their own budget. So you primes need to be aware of how much money you're going to give each sub. But the bottom line here is that there is a lot of things, and we're going to see it in the next session. A lot of things you primes can do to make sure your consortium is going to be successful. Okay, because you're going to have to strengthen them and pay for it. And that's one of the beauties of the ASAP project. It is assisting you to do some of these things through the ASAP budget as well. Okay, Catherine, anything else on the ASAP services that you talked about earlier? So
well, I just want to add a little bit to that. So our experience with prime local partners and their subs is the feedback we've gotten is that they really don't have the time, or it's not even budgeted in their prime award to provide capacity building. And so we get a lot of missions and primes calling on us to help with sub-award management. So we have, we're finalizing a training around it. We do have in-country experts that sit with local partners to help set up their system for sub-award management. There's a lot that goes into that. I think the key message is be realistic about what type of capacity building you're able to provide. Typically, under PEPFAR, people are very comfortable providing capacity building in the technical area. So say you are working with OVC partners or technical partners, you know that the guidance and you know how to achieve your targets. And that part is very accomplishable. It's the other parts in terms of USG financial rules and regulations, in the invoicing or the entering the information into Datum, or to helping the local partner mature in their development. So oftentimes local partners are founded by really passionate, well-intended people, and to have their network sit on the board. And so what we've been able to do is to work with the board to professionalize it, to give them terms of reference, to give them, the tools they need to manage and oversee the organization. ASAP has a lot of tools to help with that. And I think my guiding principle is make sure you budget for it, and discuss it with your activity manager, what the expectations are. There are some unwritten expectations that we've unearthed. And, once we make it clear to USAID, it wasn't in their budget, they're not supposed to be doing this, then they're agreeable, like, okay, we should change that. And again, hopefully something like that will come out of the day 5 local partner meeting feedback from local partners to USAID. Over.
Thank you, Catherine. So again, know what you don't know and plan to learn who your NUPIS, that's what the beauty of Catherine's teams that does the NUPISs and NUPIS pluses is they identify the weaknesses. So before you get into, or before USA gives them a prime award or a prime gives a sub award, they go in with eyes wide open, which is exactly what you want. And again, USA is not afraid to pay for it, but you certainly have to ask for it. Okay, let's carry on. 430 is on compensation for personal services. This is your salaries. And if there's any cost principle that I think you all must read, it's this one. Okay, and US government, most of the findings that we auditors find relate to compensation, salaries or fringe benefits or disallowed, something that you paid people, bonuses or gratuities and things like that. There are serious rules on this. So conceptually, all compensation paid or accrued by an organization to its employees may be allowable, subject to they are reasonable and conforms to written policy. Okay, so that's why we always test your salaries. Obviously it's normally the biggest number in an audit, people, and we're going to test the reasonableness of the salaries that you're paying your people. The second one's very important though, follows an appointment made in accordance with local laws. Frequently, people don't understand the rules of their own country when it comes to laying off people at the end of a project or what's a permanent employee versus a consultant. And, we've seen situations where, people, who knows, maybe under COVID, you got started, planned for 5 years, you hire 100 people, you have to terminate or you have to start closing down and you find out you can't terminate these people. It's like you adopted them because, in that country, the rule is no, if they've got an X contract, then, you must keep paying them. So definitely, I suggest getting an HR specialist, of course, not an employee, but get a consultant in who can help you make sure you know the laws of X country, especially if it's not your own. Some of you guys go regional and you say, oh, Zambia, it's going to be the same in Malawi. It's not, right? Assume every country is different. And then finally, supported, determined, which means effectively timesheets. Now, I'm going to be talking about systems of control and things like that. They never use the word timesheet, but the concept of a timesheet almost meets every one of these criteria for how we document the reason, how we document how much time you can charge each project for people's, how much money you can charge for the time. Okay, what's reasonable? What's a reasonable salary? Well, there's sort of two rules here. One, the first bullet point, consistent with salaries paid sort of other people. Okay, maybe non-US government people. So I've got an EU project, I've got a global fund, each one is an M&E person. And on one, the person makes 35 and the one makes 37. And on the USAID project, they make 45. And we come in as auditors and say, hang on, 35, 37, 45. Why does the USAID, the M&E person get 45? And you tell me that's what we put in the budget. That's the wrong answer. Okay, never use that answer. It's not budget. It needs to have some relationship to that person's ability, and we're going to compare elsewhere in the organization. So 35, 37, maybe 38, whatever, 37.5, but I don't want to see 35, 37, 45 unless that person is doing something that's the program requires it so much more that it's not comparable with those other people. Okay, the other one is the concept is the labor market determines what's reasonable. People fire, they come in, they go out, people have free will. If I don't want to work in your organization because you don't pay me enough, then you're not going to get me. Okay, so the whole point is just be aware of the labor market. Now, I believe there's sort of three types of labor markets. There is generally what I would call private sector, which frequently pays more. If you're going to be a finance manager of a large international bank, you're probably going to get more than the next level, which I would call the international NGO level, where your world visions and your organizations that allow people to transfer between countries when they get to a certain level. They tend to have reasonable pension plans, savings plans, medical plans. That's the second tier. The third tier that you may compete for is local level. I'm an NGO working in, pick my country, Uganda, and I need a guy who's fresh out of university and she or he is a data specialist. That's all. Okay. You don't have to say, you can't compare, the fundamental university graduate with someone who needs to go, run a bank's IT system. So just make sure you are paying your people fairly and look at the labor market to justify that. Okay, so in 430, Roman numeral I, okay, that's where you go to see the rules for documenting what you can charge to your project. In almost each of these screams timesheet. Okay, charges to federal awards for salaries and wages must, notice the must, be based on records. What kind of records? That accurately reflect the work performed. Okay, then it goes on to another must. These records must be supported by a system of internal controls. I'm not going to read these to you, but you need to make sure that when you're charging USAID or anyone for that person's time are accurate, allowable, and allocated. How do you allocate someone's time? It's easy if someone works 8 hours a day on a project. Every day the nurse or someone comes in, or the data analyst, and they only work on one project, 8 hours, 8 hours, 8 hours. That's easy. But what happens when they spread time between projects? Then it's based on actual. Budget is not allowable. Budget will get a question cost. Okay, so make sure, and that's what we use timesheets for. Now it could be digital. People could, doing them on your phone. You can do your timesheets on, I'd say timesheets. You can follow your time electronically, but the point is you do need a system to document what you're charging the U.S. government. As I said, most audit findings we have are compensation related. Okay, they incorporate it into the records. They reflect the total activity for which the employee is compensated. You're saying, why does USAID care what I do, what my guys do on the Global Fund project? We really don't care. What they do want to make sure, though, is that you're not double billing someone or you're not billing more than 100%. Frequently under NIH, great organization, a lot of research done under NIH, but there'll be the principal investigator and they estimate, okay, I'm going to spend 25% of my time on this study and 25% on this study and 25 on that one and 25 on that one. And then they get a fifth one. They say, well, I'm going to spend 25% on that one as well. Well, that's now 125%. And you can't spend 125%. So, just make sure you're aware of the commitments of your people. And it goes on to, again, I don't have time for all these things, but what's the policy of your organization? If your policy is keeping timesheets, then it's timesheets. As an auditor, when we have a finding or something we identify as a problem, what we have to check is that, did you follow the US government rule? And did you follow your own rule? And it's just as big a sin, if you will, to not follow your own rule as it is to not follow the US government rules. So you need to be aware of all your policies and procedures and make sure they are in place and operating. And that's where I think ASAP, again, can help you with that. Okay, one more thing. Okay, so the last one I want to talk about is, you need to support the distribution of people's salaries or costs among the cost activities if they work on more than one federal award. So then that could be CDC, USAID, whatever else. You still have to split the time. And finally, budget estimates do not qualify as support. I'm going to leave it at that because you are going to have a specialist, as I said, on time. So depreciation, allowable. If you own your own assets, your building, your vehicles, your computers, your generator, you are allowed to depreciate those costs and charge them to the US government. Okay. Equipment, capital expenditures. I talked about this before. The US government rule is $5,000. Everything above that, you are going to have to put on this asset, the asset register. But there is categories of equipment that's why I say you need a guy, he or she, who learns about the equipment rules, because it's not straightforward. Okay, there are a lot of caveats and differences, and you just need to be aware as this goes into, they're allowable under certain circumstances. Some of these need prior approval to be charged directly. Okay, how many of you have a vehicle? I would guess 80% of you do. Okay, realize that, again, notice here, general purpose equipment, which has vehicles down here at the bottom. How do we treat general purpose equipment? General purpose equipment, land buildings are unallowable as a direct charge except with prior approval. Okay, so are you asking, I would doubt any of you have specifically asked your AO if you can charge your car as a direct charge. Okay, I'm sure many of you would have asked, can I get prior approval for my car? And yes, you have to get prior approval for vehicles anyway. But did you go on to ask, can I get it approved as a direct cost? Okay, and chances are you didn't. Again, we auditors know that, and you don't get hammered on these things, but it's better for you to be 100% bulletproof and compliant versus having a gray area that you might get hammered on unfairly. Okay, as we said, exchange rates. It's possible when normally your local currencies are depreciating against the dollar, so your awards in dollars, and as slowly the rand or the kwacha or the Mlangeni or whatever Maluti slowly depreciate, meaning your dollar stays strong, then you're ending up with more funds in your budget in local currency. But this is when it goes the other way. As I said, in Zambia, the kwacha got strong, and the implementing partners have to go ask the AO, saying, as Catherine said, right, you should not be spending your own money. So you either get an additional budget, or unfortunately you make a program adjustment. But do that as soon as you know you're going to have a problem. Talk to your AOR about that. Insurance. Okay, so the thing about insurance is it's quite important. It goes with equipment. The bottom line is this last bullet point. Okay, the concept is that if you insure your own property, your NGOs and property, you must insure the U.S. government's. Then the rule goes on to say that even if you don't insure yours and you could insure the U.S. government property and you don't, then the losses that you have are not going to be allowable. Okay, so go on to the days when we say, oh, we thought it was so safe in that place, and it wasn't, and someone stole your car. Well, it used to be, oh, we'll move money from here to there, or don't worry about it, we'll just take it from X. Well, no more. There's no more taking it from X. The bottom line is if you could have insured it, you should. So there's no reason, if insurance is available in your country, not to insure the U.S. government assets. Okay, what's this one about? Okay, so all the stuff that you're going to use, okay, materials, supplies, reagents, all the stuff, computing devices that you're going to do to make your project work correctly are going to be allowable. Materials and supplies, reagents. The bottom line is just, so try to see if these costs can be treated directly, meaning the only reason I am buying the reagents is for these 1,000 people on care and treatment or these tests and things like that. Okay, direct versus indirect is a little bit beyond this short course, but you do need to keep in mind that you treat costs consistently as either direct or indirect. Okay, plant security, absolutely. Protect your people, protect your assets. Most importantly now, protect your data. Okay, there's things called personally protected identifiable information, and it's very important that your IT people are protecting and keeping separate a person's name, maybe their HIV status, or you gotta remember, it's not just all HIV everywhere. It's also voter, or it's also democracy and governance. Well, you can imagine in many countries, that's not the most popular NGO activity for some governments. Gay, lesbian rights, okay? A lot of those things are, in some countries, are not the government's focal point for change in women's rights. So you need to be careful of, if you're keeping lists of people who you're reaching out to, those have to be absolutely ironclad, that you're never going to have a name, a number, a phone number, an address. All that's got to be separated. And maybe Catherine, any comments on that? I know we don't have a lot of time, but just aware. The data security.
No more comments from me, thanks.
Okay, thank you. Okay, professional service costs. Be aware when you're buying things, you're buying your auditor, your lawyers, your M&E specialists, your architects, maybe those are deemed professionals. And in addition to the normal procurement requirements for competing and all those things, there are additional costs here. You can see the bullet points to make sure you're only buying what you need. Okay, if you need a Yellow Book audit, then only buy a Yellow Book audit. Don't buy a statutory audit with your Yellow Book audit. You're saying, oh, we need a lawyer for some new labor change. Well, let's get her to do something else as well. No. So it does, the final bullet point here talks about an adequacy of the contractual agreement for that specialist. And you make sure what's the service we're going to get, how long is it going to take, and what are the rates. Okay, those all have to be reasonable. Okay, finally, proposal costs. So the US government is actually very generous in enabling you to charge proposal costs, bid and proposal, but they're only allowable as indirect costs. So if you ever need to justify, and you shouldn't have to, what are you going to use your 10% de minimis for? You point them to this. You say proposal costs. Now, this is so, US government is so helpful because you can charge the cost of proposal costs for both winning and losing US government and non-US government proposals. Now, generally, that would be put into your indirect costs and recovered that way. But that's what, this is basically one of the reasons why the 10% de minimis was created in the first place, because it's unfair to organizations to have a NICRA to recover their proposal costs, but not organizations that don't. So one of the reasons is, great, 10% de minimis, that should generally cover your proposal time to prepare. How can you be sustainable if you don't have proposals? Okay, rental costs are going to be allowable. Okay, so just realize that, auditors are always looking for the reasonableness of your rental. And so, I wouldn't expect you to have, plush furniture and wooden mahogany and all this. I mean, just be very reasonable on your rent and the equipment you put in. Okay, taxes, I think this is our final one. Taxes basically are allowable if you cannot avoid them. So people say, how about my value-added tax? And, it was interesting. We went last 2 weeks ago, we were training auditors and recipients, and we went around the world to see what people are paying for VAT. In some countries, it's as high as 20%, which is massive. Okay, but the U.S. government, in their bilateral agreements with other countries, they've agreed with the leadership saying, look, we're going to support the activities of our programs, but we're not going to put our money into your VAT system, because VAT goes for many purposes. Okay, so the whole point is, if you can avoid a tax, meaning register for VAT, you must. If you register for VAT and you don't get it back, then your auditor and the mission will decide what to do in those circumstances. But the bottom line is, you should try to avoid taxes, not evade, avoid taxes if it's legal. Okay, training and education is allowable. It's, again, U.S. government is incredibly generous for training. And think about the training you're doing right now. But the whole point is, it still needs to be allocable. Okay, I don't want to train the doctor on photography. I don't want to train the auditor on blood samples. Okay, make sure you're training your people with the activities that are going to support their program. Okay, travel is a whole subset of activities. That's certainly one that you need a specialist on. Assume the bottom line is you're going to be traveling economy, unless you have some very specific reason. And all of these federal travel regulations are not run by USAID, and all these can be found under the U.S. State Department website, www.state.gov. Okay, that doesn't mean your executive director can't fly business class, but the U.S. government's only going to pay up to the full fare economy rate. Then you or he or she is going to pay the difference. Okay, so let's take some final questions here. Then we're going to take a 2-minute break, and then I'll continue on after, as long as there's still people asking questions. But with that, our question posers, please.
Okay, so one of our first questions: how many times in one financial year can a budget realignment be performed?
Unlimited. I mean, it's up to your AO. I mean, you think about it. I mean, how well do you do when you're proposing the budget if you're continuously realigning? But there is no limit. And to be honest, I asked agreement officers about it, and they said, if it has to be done, it has to be done. So don't be afraid to realign your budget. Okay.
Next question: can a sub-awardee move money across line items in its budget without prior approval from the prime?
Okay, that's an excellent question. So sometimes primes put a little bit more control over their sub-awardee's budget. And so I frequently see primes limit the movement to line items of 10%, right? USAID aligns all line items can be moved between each other. But sometimes, so let's say in our example, the budget was $1 million in total from USAID to the prime. And so the prime says to the sub, okay, I'm awarding you a sub award of 100,000. And of that, salaries is X amount. I'm limiting your movement of salaries to 10% of that line item. So they tend not to allow super flexibility. And, just like why, people shouldn't run from one side of a ship to the other, or when you take off in an airplane, they want you to sit in certain seats. It's to balance things. So a prime doesn't want to unbalance their budgets by allowing too much sub movement, moving at the sub level. Okay. Next question, please.
Can we go into a couple of questions about de minimis, or are we still waiting?
No, let's. I tell you what, if people, go into a couple, but then I'm going to get into de minimis now, and maybe we'll answer some of those questions then. I tell you what, let's hold off on those.
Okay.
Is there any non-de minimis questions? Then we'll take those. But other than that, I would rather let me just, sorry, let me stop sharing and
Just one different one here. If CDC does not recognize NICRA rule, what do they use to cover indirect cost?
okay, so what those organizations are going to have to do is they're going to have to, it's called, they may have to create a separate business unit, and they're going to have to split up their financial management to be able to document for CDC how they're spending their funds. Okay, it's more likely, forget the guys with the NICRA. That's unfortunate. That's, I think, being sorted out, to be honest, at the federal level. I belong to the Government Audit Quality Center, which is an organization that basically deals with, you know, government to government issues, U.S. government to government. And they said, look, we're aware of these not discrepancies. We're aware of these differences. And remember, it's not called it's called uniform guidance for a reason. So I think CDC may have to relent on that eventually. But more importantly, when you get your 8%, and we're going to see it here, we're going to see this answer in a few more minutes. That CDC's rule, you write this down if you're taking notes, it's 45 CFR 75 414, section 414, which we're going to see here. And then it's a section, this section doesn't exist in the USAID version, but it's subpart C, and then it's a Roman numeral II, where CDC says for foreign organizations, like most of you, okay, we're going to give you an 8%, not a de minimis, an 8% indirect cost rate that you need to use for program purposes. So for me, this is different, and I'm going to clarify it next week. We're doing some research with CDC, but I'm saying, you guys realize this is very inconsistent with how USAID implementing partners have to treat their costs. Okay, so just be aware that you're probably going to need to justify how you use that 8%. Okay, good question. Let's jump in through here. I see I've got limited time, but we still have a good number of people on. So as long as this program is going to continue, can Catherine or Jeff, can you just confirm that can we go overtime, please, for the Q&A? I'm not sure if Jeff is still on, but I'm certainly willing to spend the time if we have the time.
Hi, Doug. We should be able to go over time, no problem.
Super. Okay. So just getting back to our example here, we talked about, let's ignore CDC for now. So USAID, through the agreement officer, awards a prime funding. That prime is expected to create, through their AOR type person, a sub award that is compliant, that enables the entire consortium to be compliant as well. Okay, and as we said, a prime, most of us being non-US organizations, when the prime, so if it's IntraHealth getting money, that would be a US prime. Okay, so IntraHealth it's a US prime, but they still have to pass down to a non-US sub, the non-US rules. But more often than not, many of you, and I didn't ask of you who are prime with subs, I'm assuming most of you are non-US primes. So your award from USAID will be the award itself, the standard provisions, which incorporates all the rules you must follow, and the cost principle. So that's what you or we are going to have to pass down to our non-US or foreign subs. Okay. So here I'm showing you, with the time we have, I'm just going to take you through the requirements. There's 8, A through H, the high level requirements for a prime, what they must pass down to a sub. So U primes, or A prime, is called a PTE, a pass-through entity. And they must, and this is a big must. Okay, and there's A, B, C, D, E, F, G, H. I'm going to go briefly through them. So A is the items in the items that need to be included in the sub-award, meaning possibly the prime certain numbers, the CFDA numbers, all kinds of, more important to USAID and how the funding's flowing. But you pretty much, it's going to be similar to what needs to be in in the prime award. So let's not worry about that. That's just listed there. Okay. And then, but I will highlight that under number 14, it does go on to say, Roman numeral 14, it goes on to say, what sort of indirect costs are you going to pass down? Okay, so then it is, let's just go here, move things around here. Okay, so that's what's in 1. So 2 requirements imposed by the prime on the sub so that the award is used in accordance. Okay, so that is to make sure a consortium, everyone's not doing the same thing in a consortium, right? A prime could, the prime itself might be doing certain things, and then they sub-award stuff out, male circumcision or certain language things that only take part in this part of the country, whatever. But the consortium as a whole has to be compliant. So a prime might be passing down to sub some required as applicable provisions, which means that the prime, whoever the AO equivalent, she or he need to understand what is the sub doing so that the consortium as a whole is successful. Then 3 additional requirements that the prime imposes on the sum because we're at A right now. Under B just below, it's going to be that we have to perform the NUPIS that Catherine talked about, a pre-award survey or some sort of risk review to make sure that we know if they need to be strengthened. So that's what, so these would be special award conditions. So the prime should put in the sub award special award conditions if the sub needs strengthening or is weak. Okay. Now I'm getting down. This is brand new, brand new. Okay, and this doesn't exist on the CDC side, and again, they're not being conforming. So, but here's where you earlier, some of the first questions you had is, does the prime have to give a sub an indirect cost rate? The answer is yes. Or NICRA, yes. Or the 10% de minimis, yes. Okay, so if the sub by chance had a NICRA, then the prime needs to give that sub the NICRA. So example, if AMREF brought in right to care and right to care as a NICRA, AMREF has to recognize that and give it to them. Okay, that's not going to be common for most of us. Okay, so A41A says the negotiated rate, if it exists, or a prime is able to calculate, this is complicated, but a prime is able to calculate the NICRA for their sub in that circumstance, but it's not going to be recognized by the US government. So IntraHealth could have a sub in Ethiopia, and they could say, okay, we want to help these guys understand NICRAs, so we're going to set up a NICRA situation where we can give them a %. That's unlikely to happen. So let's go down to B, right? Go back up here, A. Okay, a prime must give them either the NICRA, which is not going to happen, or the 10% de minimis. Okay. This is also new, very important here. Pass-through entity must not require 10% if the sub has an approved rate. And subs, you can elect to use the allocation method that I talked about before. The 200.405, that's allocability. We looked at A, 1, 2, and 3, but as I said, in D, right? That's where the third sentence in there is very clear what I said before. If you must incur a cost to be in business, then the prime or the US government should pay for it. So study 200.405 closely. Okay, so that's what is in A. It goes on, okay, it goes on to say that a prime must make sure that the sub gives you access to their records. How else can we management? How can our subrecipient management team manage a subrecipient if we don't have access to their records? It gets a bit complicated, but as an auditor, okay, if I'm auditing IntraHealth, okay, and they've got subrecipients who are over the threshold, someone else is auditing those subs, okay? As the prime auditor, I only worry about IntraHealth's money, but I also have to worry about, and when I audit, I have to give my opinion on how about those small subs? How about the subs, these guys over here who were small, these small subs here. So I, as IntraHealth or any primes auditor, have to work with you, with your subrecipient team to say, if I'm going to say these costs, if you manage correctly, I'm going to need access to those records. Okay, so please make sure, because frequently people say, it's my records, you don't have access to them. No, you can't. This needs to be discussed in when you're doing your dance, when you're doing your setting up your agreement with all of them to say, yes, we will have access to those records. Okay, so let's go back to the Q&A now so far. Again, we really haven't gotten too deep into the 10% de minimis, but you know what we did? We missed the 10% de minimis. You know, I went straight to this. So let's carry on with this, and I'll do the 10% de minimis just after this. This section is quite quick. Is there any other questions on subrecipient management right now?
So we have one question that says, if a subrecipient incurred bank charges because of an error on providing incorrect accounting details, is it allowable cost?
Okay, so bank charges are allowable. It's an expected. Obviously, you no longer are required to have a separate bank account, but we strongly recommend that you do. But yeah, I mean, bank charges are allowable. If it's because of a fine or a penalty or a mistake, then potentially it might not be allowable. But generally, bank charges are. And that's a specific question for a specific environment. Okay.
And we have, can you please confirm what type of audit costs are not allowable for subs?
Well, everything allowable at the prime level will be allowable at the sub level. If you must have an audit, that's a good question, and we're going to get to that in a picture here in a few more minutes. Okay, I'm cognizant of time, but I will answer that question in a slide. Okay, let's carry on. Okay, so
Okay.
I talked about this. Subs must let the primes have access to their records. B is what Catherine was talking about, and what a lot of the valuable work done by ASAP is the surveys to evaluate the subs risk with non-compliance. Okay, so that is something that there'll be a whole webinar on, I'm pretty sure. But yeah, we look at the various domains, and ASAP has a lot of good people in each country who do this. They'll look at either the 6 primary domains: finance, HR, procurement, and then the NUPIS Plus adds the additional ones to give extra comfort that those the new NGO or the NGO is going to be competent. Okay, so that was B. C is just, and again, we asked, is it a checklist? It essentially is a checklist, but as the ASAP team and all of us who participate are learning that the checklist needs to be driven by a person who can read the checklist, and not read it, I mean make sense of the questions. So that's just a checklist for a pilot to fly a Cessna 172. Yeah, you could fly it. I know what these things mean, but I mean if you're not experienced, don't get up in the air and risk someone. Okay, so what happens is when you do those NUPISes, and if you find weaknesses, which frequently are found, then you impose those special award conditions that we just talked about, which is fine. Nobody's perfect. Some of the largest NGOs we work with who get over $50–60 million a year still have special award conditions because there's always weaknesses. Okay, D is to monitor the activities of the sub. So this is the responsibility. The prime must monitor the sub. Okay, those monitoring of the sub must include reviewing both financial and performance reports. So that's why Catherine talked about, yeah, there'll be a finance review, but there'll also be a, the M&E and the data people to make sure that's going to be correct. And then there's 2, and this is the second one, has to do more with auditing, sort of with auditing. When a subrecipient gets audited and there are weaknesses, the prime, the AO equivalent, he or she must figure out what to do with those findings. You can't just hear my sub is weak and then you don't do anything about it. You have to follow up to make sure that they take actions on it. And 3 is even more hard biting, is that if the subrecipient auditors found ineligible costs, the subs ran through the Christmas party, they ran entertainment through, the prime, if they didn't catch it as it went through and they just passed it on the USAID, now they've got to decide what to do with it. Okay, then essentially assume the sub is going to have to pay back the money. But that's where the risk is for the prime. If the sub can't or won't, then the prime's left holding the bag. Okay, this one down here is new. This is more relevant when we have people who have different, both USAID and CDC or other State Department funding. There are rules for who resolves the audit in that situation, who resolves the finding. Every agency doesn't make an opinion. The cognizant agency does. Okay, so here graphically, USAID gives money to a prime. They give money to a local sub. It's more than 750. They need an audit. Second situation, prime gives money to another local sub, but they only give them 500. So everyone's thinking no audit. So I don't need to put audit costs in there. I don't need to worry. I'm going to have to subrecipient manage with them. But so yeah, that's fine. But unbeknownst to them, another prime gives them more USAID money. So now they're over the 750 threshold. Now they need an audit. And here's where the crime starts, because prime A didn't realize that, prime B didn't realize it, but an audit is required. It's going to have to take place. So who pays for it? So one of the requirements, primes, you're going to see is you need to be sure, and the auditors need to do this as well when they audit you, they need to make sure what is happening at your sub level, and do these subs need audits or not? Are you sure, prime? When I propose to you to do your audit at the prime level, okay, I need to know, are these subs going to be audited? Do they need to be audited or not? Okay, I mean, sustainability might not be doing that audit. It could be Deloitte, PwC, someone else, but we have to know. Otherwise, we can't propose to you for a correct audit of you or the subs. And then finally, it gets very convoluted right now, especially in CDC throws funding in under PEPFAR. and then what happens? And that's where essentially for now, assume USAID wants their funds audited separately. CDC will get their own report. That doesn't mean we can't audit it together. It means we separate the reports. Okay, here's where I said this comes out of the audit guidelines. The auditors should ascertain before preparing our proposal to you to audit you whether your subs are going to need to be audited or not. Okay, so what you need to do, primes, you need to keep asking your subs, who's funding you? We're funding you. Is anyone else? And the problem with some subs is they don't know. PEPFAR isn't a source of funding. CDC, USAID, Peace Corps, state, defense, those are all the sources. You need to know who's the source of the funding. And even for the large guys like the CARE, Save the Children, they get funding from the US government or non-US government source. So you just got to be very clear who is funding your subs along with you. Okay, as we said earlier, depending on the prime's assessment of the risk, as I said, you can provide subs with training and technical assistance, a lot of what ASAP's doing right now. You can perform on-site reviews, as ASAP does right now. And again, arranging for these agreed upon procedures that we talked about in audit that I showed you earlier. Okay, remember, it must be GAGS approved, so get an audit type firm up there to do it, approved by the mission, also have it be paid for by the prime, and it's not going to be the audit. It's going to be some other type of strengthening. Okay, so F, G, and H are very quick. Make sure that the sub gets audited. I've talked about that. Consider whether what the subs auditors find is going to affect our primes numbers, and they will possibly if there's a lot of problems at the sub level. And finally, if the sub isn't willing to strengthen, get a proper audit, you as a prime have to make a decision on behalf of the consortium. Am I going to continue working with you, or are we going to have to terminate or end our relationship? Okay, any questions on this before I jump straight into? Do we need to take a break, anyone? Catherine or anyone? I'm happy to go on, but
Totally up to you, Doug.
okay, so let's just carry on. I'm going to stop sharing this one. If there's any questions, please let me know. And then I will get into the final set, which is 10% de minimis. This is always fun. Okay, so this is okay, this is by definition, it's got to be fairly short because not only do we only have so much time, but this is complicated. So I'm going to try to not complicate anything. I'm going to try to keep it at a level where I answer most of your questions, which are very good questions. Let's just spend 2 minutes talking about a NICRA. Okay, a NICRA stands for Negotiated Indirect Cost Rate Agreement. And that's where, if you're in the States, you can get one. USAID, CDC, state, anyone, labor, you can get it. Overseas, basically, USAID's not letting you have. CCC says absolutely not. Okay, USAID says maybe. Okay, but for a NICRA environment to exist where it's successful for everyone, these 3.5 players have to be able to understand the rules and play by the rules. So first of all, the implementing partner needs to want one. And then they're going to need to basically calculate and have a pretty sophisticated accounting system to ask for the NICRA. Okay, if you send me an email, and I'll send you some digital packs that have for USAID the procedures for. You can get it on online anyways. It might even be on the ASAP site, but the ability to how to calculate a NICRA. Secondly, USAID has to be willing to accept your proposal. In many countries, they're not. And it's not because they're mean, it's because the agreement officers who are already up to here with doing what they normally do are being asked to go to here, and they're going to drown because NICRA is a specialty. And USAID has a specialty group in the US, but they're just saying, look, we're too busy handling domestic people. So if you want to issue a NICRA overseas, you do it. Okay. Now, there have been some missions who do this. Certainly South Africa has, and some other missions have, I know. I think Kenya has, but generally it's going to be up to not necessarily your AO, but an AO in the mission. Okay, it doesn't have to be, everyone doesn't have to do it. As long as one person is comfortable performing the calc and issuing it, then you'll be okay. So ask before you start down the road for a NICRA. Finally, the auditors need to be able to audit it because a NICRA is audited, unlike the 10% de minimis. Then finally, the rig plays in a little bit. where they oversee the mission, what they're doing, and they oversee how the auditors are doing. So they also have to have some competence about it. Now, in a nutshell, NICRA 101, what is a NICRA? A NICRA is simply taking your allowable costs and putting them either into an indirect cost pool or a direct cost base. Okay, this is it. In a nutshell, you are taking all your good costs, your allowable costs. You get rid of the distorting items. You get rid of things like bad costs and entertainment we looked at, and bad debts and alcohol. All that comes out when we're left stripped out with our good costs. They either go into the pool or the base. And as I said, there's three different types of bases: total direct costs, which is the biggest base; modified, which we're going to use for the 10% de minimis; or salaries and wages, which is used more for professional service organizations where people, just hardcore people like lawyers or auditors or engineers or architects are, the activity, and everything else goes into the pool. Okay, and that's all a NICRA is. You define, do I put stuff into the pool or in the base? Now, of course, it's easy to throw stuff into a pool, but the bigger the pool gets, the higher the number goes. And when people start looking at percentages, if I told you that, geez, my organization has a 100% indirect cost rate, and IntraHealth is whatever it is, say it's 18, 20%, which one sounds more efficient? You're going to say, how can you have an indirect cost rate of 100%? Well, it's because maybe it's a different calculation. Okay, I did a training for USAID AOs, well, anyone who wanted to know about NICRAs, and an important point was you cannot compare people, organizations, and indirect cost rates unless you are 100% certain that you're comparing apples and apples. Okay, so don't assume a 20% rate is better than an 80% rate unless you understand exactly how it's made up. Okay, so here's the indirect cost rate guide for organizations. It takes time to get through. This is a specialty, right? You need a person who's going to devote their time to learning indirect costs. So why would you want a NICRA? Eventually, if you can get them, you should go for it, okay? Because it allows you to recover those joint and common costs. So you don't have to every quarter split out, how am I going to split my rent? How am I going to split my finance team? How am I going to split my HR team? Because all of those can locally just logically go into the pool. Throw them in the pool. Don't try to split them out as direct costs. That's the main reason. Secondly, you recover your bid proposal cost, hugely important. Thirdly, there's certain rules on small dollar size stuff. They just say, look, don't charge it directly, just put it in the pool. And fourthly, it does show donors that if you can calculate a US government NICRA, you are deemed fiscally or financially responsible. Okay. We helped an organization prepare their NICRA once, and they were also getting funding from the Global Fund. And the Global Fund had limits on the funding. And they said, here's my USAID rate. You can tear out the numbers, but our rate is X, which was higher than the Global Fund generally gave them. And the Global Fund said, well, if you can prove it, we will give you that rate. Okay, so it is a sign of fiscal maturity. And so you should start thinking about it now, even if you can't, if your AOs aren't going to allow it. Okay, so if you can get a NICRA, it's probably worth the effort to put into it. Okay, let's finalize with the 10% de minimis. So de minimis was created. It came out first on December 26, 2013, when the Federal Register came out. The day after Christmas, it came out on page 78,600 of the Federal Register. Okay, and so in there, they talk, there's a whole process you have to go through to get things into the Federal Register. And the bottom line I want to teach you here is that it was set at 10%, even though most NGOs in the States had a 15 or 20% rate. So the people who are commenting say, why are you only giving 10%? Everyone else seems to have 15, 20. That's fair. Why is that? It's more fair. They said, no, they considered down here at the bottom here, COFAR considered the possibility of raising the rate, but recommended, here's the real wording, that as an automatic, raise the rate, but ultimately recommended that as an automatic de minimis rate without analysis of actual costs, meaning it's not audited. They decided to keep it at 10%. Okay, now the rule uniform guidance last year, it had to be revisited and they kept it at 10%. So it's 10% full stop, right? It's going to be 10% for a while now. Now here, one of you asked the question, do I have to justify it? As I said, November 12th last year, section 414F, what that says here is, this is where it talks about the 10%. In addition to the procedures outlined in Appendix E above, paragraph E, which is how to calculate your NICRA, which you're not going to do. It's Appendix 4 if anyone wants to go there. It says any non-federal entity, you, that doesn't have a current NICRA, you, okay, except for those American Indians, which is not you, American Indian tribes and Eskimos, which is not you. Notice it goes on to say you may elect to charge a de minimis rate of 10% of MTDC. It's an election, it's a choice. You're supposed to get the choice to choose it. And I showed you in the subrecipient thing where a prime now is expected to give the 10% to the sub. So it's if I were all of you, primes and subs, I would assume a 10% de minimis. But because now no documentation is required to justify it. Well, it's like game over, right? It's free money, but it's not free money. Because this next sentence protects the US government. As described in 403, which is allowable costs, these costs must be consistently charged as either direct or indirect. It can't be double charged or inconsistently charged. What does this mean? In the little time we have, I'm just going to say that what that means for you, you should create what's called a cost policy statement, where you take your costs and you define for the US government that I charge these costs as direct or indirect, or if you're charging them both, in what circumstances can you charge a cost directly and indirectly? Maybe travel. When someone's traveling to the field for a project, that's a direct cost. Chief of party flying regionally to go to an AIDS conference, that's an indirect cost. You set this policy in writing. It's in that digital pack that we talked about. Okay. MTDC is defined here. All direct salaries and wages. So it's very simple. It defines what's in and out of MTDC. Okay, so it says what's included is salaries and wages and fringe benefits on those people who are direct. Everything you need to do to run the program, materials, supplies, the services you need, the travel for the program, and only the first $25,000 of every sub award. And that's 25 for the whole project, not for 1 year, not each year. So if you've got a $10 million project and some sub gets $1 million, okay, only the first $25,000 of that sub gets included in the base. What do they exclude? You can read it here: equipment, capital expenditures, patient care, rental costs of your building, tuition, you're not going to see that, or scholarships and fellowships, but then participant support costs, and then all the sub recipient over 25,000 excluded. Okay. When we do the other webinars and trainings, we do have time to go through an exercise, and everyone thinks based on this, it's easy. It's not easy. Once you've done a couple of them, then the penny drops and it sinks in. Okay, here's what I said. Hell, if you got CDC funding, I did say this is 414C1, and then read the double I at the bottom. Okay, this is what CDC allows. Indirect costs on grants to you, foreign organizations, performed fully outside of the US, may be paid, unfortunately auditable, to support the costs of compliance with federal awards, agreements at a fixed rate of 8% of MTDC. Then it goes on to exclude the same things. Okay, so this is where it's automatically right now. It is not uniform, but you just have to deal with it. So you should recipients. The thing you should try to be doing is direct cost as much as you can, and then get the 10%. That would be your best strategy. Okay, so we have some final Q&A, I hope. What do we have? All the 10% de minimis, and any other questions are fair game.
Okay, so we can start with the first one on our list.
Okay.
Is there any restrictions for sub-partners to receive the 10%? The same as the prime, if it is planned and approved?
They should receive the 10%, and if they don't, that's the problem. So now again, you could still go for the direct costing strategy. I don't know why you would, but that is possible. And CDC, you should just say direct charge everything. So, but if you're going to direct charge everything, make sure you read 405D to make sure you're recovering all your costs. Okay, good. Next question.
Can expenditures on de minimis be disallowed? If yes, what under these situations can happen?
Okay, so you broke up a little bit in the beginning. Read that again.
Can expenditures on de minimis be disallowed? If yes, what under what situation can this happen?
So in theory, no, because they are not auditable. But again, let's be fair, everyone. I mean, you're not supposed to try to earn a profit out of your 10% de minimis. So again, I would be justifying it with, sometimes they don't want to pay for your board fees, or your lawyer, or your statutory audit, or your internal control framework. So, I mean, you can always find a reason to see where you expended your money. Good question.
What is the maximum percentage for NICRA? The International American NGO subpartner negotiates NICRA directly with USAID. What is the positioning of the prime local organization?
Okay, so prime locals, you must accept whatever the U.S. government negotiated with that organization. If it's like an in-law, if you marry the spouse, the in-law comes with. If you bring on an NGO, the NICRA comes with. And so the bottom line is, I've seen situations where people say, yeah, but I got a NICRA. Well, the question is, if you're so expensive, we just can't have you in the consortium. So just be careful bringing in people who are just too expensive. But the bottom line is, if the U.S. government was happy with that NICRA, you shouldn't be too unhappy yourself. Okay, good.
The next one, I would like to understand if the 10% de minimis incides on sub-grants budgets, or better, how is the 10% calculated for the prime with USAID?
Okay, so it's calculated the same way. But remember, okay, at the prime level, the subrecipients, expenditures are excluded from the prime. So if a prime has a $10 million project and 3 million of that is subrecipients, then automatically that 3 million, minus 25 per one gets pulled out. So basically the 10% de minimis is to give you overheads on your activities. That's the concept, similar to a NICRA. Okay, but the subs will also have their own activities. So a subs 10% will be included in their sub award. So the prime includes the 10% in the sub award. And then that pretty much the whole line item comes out, subrecipient line item comes out when calculating the prime's 10%. Okay.
I think the next question, sorry, go ahead, Abdul.
Yeah, the next question is in the budget categories, which costs are not included in the 10% calculation?
Okay, so if you go back to the slide before, which I think it told you which ones were excluded. Let me just, I can't go back there now, but it's in the, you can look up MTDC. It's in the uniform guidance, but look up the 4.1. It's in the USAID, as a matter of fact. Mandatory standard, requires applicable provision number 5 gives you the definition of MTDC. It's pretty straightforward. That's all we have time for here. What's included? Basically, your activities, your salaries, direct salaries, wages, fringe benefits, travel, services, that kind of stuff. Okay, good.
The next question is, do we have to account for the 10% de minimis? I think this was also.
Yeah, no, in theory you don't, but make sure you're not double charging. Good question.
Yeah. And then the other question is, after budget approval for any organization to continue running, is it allowable to advance to the indirect cost or 10% de minimis before the implementation starts?
Okay, no, what happens is you get your 10, just like the NICRA, okay? You get your 10% de minimis when you justify that you've incurred costs of the base. Okay, remember that 10% de minimis is real life costs that you're incurring each month. And so this is going to take additional accounting now, because each month now, you're going to have to calculate, here's what I spent USAID or subs to my prime. Here's what I've spent. Of that, what I spent, these costs attract the 10% de minimis. I call them sticky. These costs are sticky. So my salaries for all my people, that's sticky. I want the 10% on top of that, right? Oh, I had travel, that I want 10%. And you're saying, I still want to recover my rent, but that doesn't get the 10%. So each month you're going to have to do that calculation to recover each month or each period that you put in your submission, only 10% for that period. Okay, very good question. So that means the auditors, remember, we auditors don't audit the 10% de minimis, we audit your calculation. We audit that you got the base correct. Okay, good.
So the other question is, please, when you are addressing question on 10% de minimis, kindly explain what the difference is or are between NICRA and 10% de minimis.
Okay, well, I think we've sort of covered that a little bit. The NICRA is a full-blown calculation that we saw. You have to put things into a pool or a base. Similarly, you recover it each period, and you recover it, but at the end, it is audited, and there could be situations where you've over-recovered and you have to pay it back. And if you've under-recovered, pretty much you actually lose. So NICRAs are, you can recover it as cost share. which is, that doesn't really count. So if you're going to have a NICRA, that gets very complicated. 10% de minimis is reasonably straightforward, and it's not audited.
Great. The other question is, sorry, what are some of the compensation for employees? I'm not sure if it is, maybe.
Well, I mean, compensation is your compensation can be not only your salary, but your fringe benefits. Okay, so, and a lot of times people's salaries, people always say, oh, I can't cover my salary. Well, don't forget, everyone, fringe benefits can be very helpful. Medical, all the other unemployment costs that have to be recovered. So, fringes are a good way possibly to keep employees on side. Maybe you offer training or other sorts of things that they want. Sometimes people move to NGOs because they're treated more nicely, or just for whatever reason. So just be sure you're aware of all that you can recover and make that part of the employee's package. Okay.
Great. The next one is, since computers are less than $5,000 to qualify as the equipment, is there a need for AO or prior approval on computer purchase for the project use, if not originally in the budget?
Okay, that's a great question. And I don't think you would see it listed as that needing specific prior approval. But you know what? I think it's never bad. I think Catherine would back me up here. It's never bad to just ask anyways, okay? The reason I say this is because the rules have changed over time, and the more experienced, older AOs, might not realize the current rule means you don't necessarily need specific approval. So I would say it's never bad to say, AO through my AOR, we need this. Now we hired 3 new people. We need 3 new computers. I'm just confirming we can purchase these. Okay, never hurts to ask. Good question.
So we
The
also
next
have
one is, go ahead, Dana.
We have one question in the chat. How can we mainstream inflation and devaluation of currency in expenditure management, especially for payroll-related expenses?
Okay, well, that's a good question. I would guess you probably should have had some sort of escalation in your original budget, in your proposal. I mean, most people look at the CPI index, inflation, and factor in 3, 4, 5%. Okay. Now, I do know, as a matter of fact, and I hate to say this, I mean, I'm not being bad to the agency, but I know CDC sometimes just holds people and says, no, there's no increase. There's no increase. There's no increase. For years, the poor people haven't had an approved increase. Now, I don't know how they can say that, but again, rule number 1, never upset your AO or GMO, but you should be able to factor in increases. I don't know if Catherine has any thoughts on how, just normal increases. It should be budgeted for. I haven't seen it on the USAID side that they haven't allowed cost of living increases. I know for many, go ahead, Catherine.
So it is typical to include cost of living increases, but you still need approval from your activity manager, your agreement officer representative, and that agreement comes through in the budget that you have prepared. So you do the budget, you have a line item for the cost of living allowance or cost of living increases, and when they approve the budget, that is also approved. So it has to be transparent and in the budget for approval.
Okay. Good. Okay, carry on. Good, excellent question. Thanks, Catherine. And again, it never hurts to ask your AO. I mean, anything, don't see it as a burden. They generally try to help you. Okay, next question.
So the next one, another challenge is that the LIP, this is more like a statement than a question. A challenge is that the LIP misses a quarter target and recovers in the next quarter. USAID doesn't pay for the recovery, but is very fast to cut.
Yeah, that's a statement. I can't certainly say that USAID's, I don't think they try to be, bad to people or try to harm them. I think that's why you have a good relationship, always work with your AO or AOR, but yeah, I can't comment on that specifically.
So the next one is, can a term or a policy in Science of Procedure Manual over, I think it's probably USG rule, be used in a policy or procedure manual?
Read that one more time.
I think what they're asking is, can a term or a policy from the USG rules and regulations be used in a procedure manual?
Yeah, I think many of them would be, especially in the procurement space. Absolutely. Procurement is probably the highest area where you've got to really understand the rules. And I can't get too deep into it, but it's funny enough that the rules at I talked about the light version being the standard provisions for non-US as a light version of the prime, but it's actually not just that. For the non-US organizations, they've taken the US or the global rules and modified them that they're unique. So you absolutely, I would say it's a must that you incorporate the US government rules in your local rules. Absolutely, that's a must.
And I think another follow on that is, can a policy in an organization or government law override USG rules and regulations? For example, retaining percentage on salary for organizational sustainability.
Okay, so good question. And the US government rule is you shouldn't break a local rule to meet a US government rule. So you need to be aware, and that's why we said, especially in compensation, you need to be aware what are the rules in each country, and then what are the US government rules. And that's why for implementing partners, as soon as you get your award, you need to read it closely and talk to your advisors or whatever, and make sure that there aren't contradictions in there. The US government doesn't expect you to break a local law to do US government money. But realize the AOs are supported in each mission with what are called A&A specialists. And these are people who've normally been with the mission for many years, and they know the rules. So a new AO may come in, they move from Nigeria to Kenya, and they say, oh, we're going to do this. And the local A&A specialists are going to say, no, you can't do that here. No, here's the local rule. So it's probably rare that there could be that discrepancy. So read your agreement, understand it, and if you've got a problem, talk to the AO. Okay, next question, please.
Next question is non-motorized vehicle like trailers. Do they need prior approval? Again, if you're ever not sure, ask. I don't think a trailer would necessarily need prior approval. Remember, I've read a lot of rules over 40 years. I don't think I've ever seen a non-motorized, trailer have to have prior approval. But again, if Catherine, with her wisdom of years being on both sides, certainly please weigh in.
So a good time to figure this out would be, again, when you do the budget and you have that as a line item and you're discussing the budget with your activity manager, that's when you can confirm that that does not need approval from the agreement officer. So that would just be a good way to clarify it. Motorcycles and other motorized vehicles do need prior approval. We've seen organizations receive funding from USAID and not realize that, and they're very close to purchasing motorcycles until we tell them you won't be reimbursed for that because you don't have the required approval from the from the agreement officer in the Office of Assistance and Acquisition. So again, it's a discussion to have when you're developing the budget, and to point it out to your activity manager, and then they'll confirm. So basically, seek as much clarity as possible. Thanks. Over.
Thank you, Catherine.
Next one is, can you come again on the question on moving money by the sub-awardee?
Yeah, okay. So the federal rule for prime is that they can move up to 10%. In theory, I think a prime could pass that rule on down to the sub, but regularly they are more limiting of subrecipient movement, and they can be. That's probably the more important thing to say. And so I don't think a prime wants a lot of his or her or their entire organization shifting back and forth, at every level, prime and sub level. So primes tend to be more restrictive on subrecipient line item management. Next question.
Great. Yeah, next one is we have approval of 10% de minimis with our consortium members. We also provide sub-grants to CSO and health facility sub-grantees. Does the 10% de minimis also apply to this?
Yeah, I don't think there's a limit on how far down the food chain it can go. So I think subs could have the 10% de minimis. I think it is a pass down requirement. So yeah, I don't think there's a limit for the CSOs and other organizations. If it's a sub award, they can get the 10% de minimis.
Hey, is it possible for the prime to predefine sub before receiving funds from USAID or CDC? Sorry, pre-finance.
Yeah, I think I'd be very careful on that. The rule is don't spend money that hasn't been obligated. So certainly, even if a prime got money from USAID, until the prime obligates, meaning makes available funds to a sub, I wouldn't start spending. No.
Given that subs are required to keep a separate bank account for grants on primes and USAID, when the project winds up, how do the sub deal with the costs arising thereafter?
Okay, so good question, but the current rule is that USAID no longer requires money to be kept in a separate bank account. But I think that's just the wrong answer. I mean, it's the rule. But so my recommendation, first of all, is everyone, prime sub, should keep a separate bank account for each project, because it goes on to say when you have interest, when you're on an advanced basis, and most not-for-profits are on an advanced basis, meaning you get money before you spend it, then that's meant to be kept in an interest-bearing account. And if you don't have a separate bank account, keeping track of interest becomes very difficult. So assume everyone should have it, and at the end of the project, when you close out, whatever funds remaining in that account, if you can't justify why you're keeping them for your audit or something like that, then you return them. That's the rule. You didn't spend it, return it. Good question.
Are contributions to the organization's audit allowable?
Contribution to the organization.
I'm assuming
audit.
this is the statutory audit.
Okay, so yes, if you had to have it to be in business, in many countries is required. Certainly here in South Africa, you are required to have a statutory audit of when foreign funds come in. So the organization, I think you allocate a fair share of that audit to USAID or the US government. And I would say, if I looked at it and said, okay, well, down here, we've got Global Fund giving us $1 million, Gates Foundation giving us $1 million, and the US government giving us $2 million in a certain year, then US government funds were 50%, 2 of the 4. And so I would allocate 50% basis to the US government. Those are the things that number 407, I talked about getting prior approval. That's exactly what they're for, to approve the allocability methodology for the US government. Okay, next question.
Go ahead, Lele. Okay, so the question is, we did an indirect cost evaluation and it turned out to be 10.94%. When we submitted to the prime, the consultant report and the documentation, they rejected it and continued to pay the 10% de minimis. What can a sub do in this case?
Okay, well, I mean, remember, a sub does not have to try to do that calculation for a prime. Doesn't have to do it for a sub, and very few do. So unfortunately, if you came to 10.94, then and they're only going to give you the 10%. What you might want to do is go back and see of that 10.94. Are there additional costs in there that you can further allocate as direct costs? It gets a bit complicated, but it just requires more and more accountability, not in the sense of you're doing bad things, but if you want to keep on allocating that are normally direct costs costs that are normally indirect. If you want to turn those at 10.94 into 9.99, you're going to have to find something in there that is really an indirect and turn it into a direct, meaning do more allocation. And that can get complicated because frequently you're going to be allocating indirect costs down to direct and then have to do it at a second or third level. right? Think about the electricity for the IT guys who are indirect in nature. So, okay, the electricity, not only is the guy have to be allocated, he or she, but then you got to allocate their overheads. Okay, how about the parking space for the executive director? How does that allocate? You know, so it gets complicated. It is possible. If you're losing less than 1%, I probably wouldn't complain too much. Next question, please.
The next one is if the de minimis is not documented or audited, how can the prime get assurance that the funds are spent on only US allowable costs?
Yeah, no, great question. And they can't. They can't get comfort, but remember, go on to the next sentence, which is the catch-all, saying still as per allowable costs, it's important to be able to show that you're not double charging or inconsistently charging those costs as direct and indirect. So that's what we say. It's called a cost policy statement. Your finance team needs to sit down with all your expenditures and just decide, how are we going to charge X? How do we charge rent? Okay, well, that's based on square footage or meters. How do we charge HR? That's based on headcount. How do we charge the finance team? That's based on maybe money spent, or again, headcount, depending on the nature of the job, of the projects or whatever. How do we charge IT? Okay, based on points of presence or computers. How do we charge procurement? Maybe procurement spend, maybe the transactions of procurement that happened in that quarter. So there's different methodology. That's what we teach in the full-blown NICRA course. All these different type of methodologies that are allowable. You just have to allocate it on a fair, consistent basis. Very good question.
Great. Next one is under rental cost exclusion, that this also exclude the office rental to be able to get to charge the 10%.
Yes. Yep, that's exactly what it is. The rental, why should you get 10% for renting a building? You rent a bigger one, you get more money? It's like, no, you didn't do anything. Rent's just a payment. The whole point of the 10%, it's based on the activities that you do. The nurses going out saving lives, people managing orphans, planting maize, all the stuff that the projects of the activities is what you get the 10% for. Okay.
Great. Next one is it allowed to transfer the 10% to an overhead cost account so that it is isolated from the total program cost, but calculated properly?
Okay, the 10%, if we're talking about the de minimis, so if you go back to number M3, it talks about what you need prior approval for to move money around. And it's funny, only USAID has a rule on transferring costs between direct and indirect. No other agency does. So I would go back to M3 and this 10%, because it is in theory an overhead cost, the de minimis, it's below the line. You've got all your salaries, equipment, program subs, ODCs, line, 10%. I think you could transfer it, but remember, you don't have to justify what the 10% is for. I mean, so strategically, you wouldn't be moving money. If you need money in the direct cost line items, you need prior approval anyways, but I don't know why you do that. I mean, you certainly can. You don't need to justify what you're using that 10% for. Okay, excellent. I think we have a few more.
Just add on to that. I think what the person is also asking is it possible to take that 10% and move it into a separate account, although it's calculated correctly and everything, but to keep it separate from the rest of the program costs?
Yeah, that's a very big gray area. And I say that because, conceptually, just like with CDC, you're meant to use those costs for program purposes, but it's not so clear. And if you think about it, that's why bid and proposal is such a good example. If USAID, US government, not just USAID, is going to give you allow you to use that 10% for losing EU proposals, that's got nothing to do with your US government program. So in that case, yes, you can spend those funds. I think there is some expectation, you're getting really, really, really gray now, but that you try to use that 10% in the year in which you incurred it or earned it. But again, that could be, I think that's a very good theoretical question, but as you don't have to justify what you're using it for, it will never be audited. Okay.
Maybe the next question, what is the difference between 10% de minimis and admin cost?
Well, a 10% de minimis is an allowance to spend money as you will. An admin cost normally is what you would spend that 10% on. Okay, so if the 10% de minimis, sorry, when you have the NICRA, the indirect cost rate, it's all those admin costs that you were putting into that numerator, the pool. Okay, I've got my executive director, I've got her PA, I've got whatever else, I've got my M&E people all go into the pool. Okay. Now, for when you don't have the NICRA, you have to direct cost most of those people, but there still could be some costs left over that are admin in nature. And yeah, that's what the 10% is generally used for. Okay. And on the CDC side, that's what they say. That's what we want you to use the 8% for. Use that for your board. Use that for your internal controls, because it's not specifically for, program achievement. It is the overheads. Okay.
So there's another question here in general. Would it be possible for a local NGO to hire you to develop their standardized policies?
Yeah, you could, but I mean, ASAP project is great. That is, what they're for. So I think after this, depending on which country you're in, I mean, Catherine and the team may be able to do it under, a budget already. Obviously we cost, but we can, but, we're a proud member of the ASAP team. So you might want to start there first. And if that can't work, then of course we're always happy to help.
Can the USG ads finance them in the middle of the approved budget is over? Sorry. Yeah, they can. If you're running out of money, it is possible for the US government to give you more. But as Catherine intimated, you want to be crystal clear each month when you're submitting your burn rate and your analysis. That's your AO is supposed to be on there with you saying, how far do we have to go? Are we going to achieve our goals? Can you do it with this amount of money? That's what the burn rate sort of looks at. So in that sense, if you're running out of money, then whoever your AO is, she or he would be talking to the AO saying, these guys are great. We're loving them. They're achieving everything, but they're just running out of money. And then again, I can't say how they do it, but certainly if there's projects that are failing, and remember, in many of our countries, the local currency is depreciating against the dollar. So frequently there ends up being enough dollars to, do your project in Nara or Kwacha or Burr. So yeah, but do communicate. Rule number, talk to your AO regularly and AOR. Okay. I think that was our last question. The last one was just a clarification on that question. So I think we've covered it. I don't know if there's anyone that has anything else.
Okay, well, first, I just want to say thanks to all of you for sticking on to this longer Q&A session. When I had to cull slides from our longer presentations, you never know what to cut out because it's all important. But certainly, you have to thank ASAP. ASAP, the project, does have webinars. They are going to continue to fund things like this. And never be shy about asking ASAP or USAID to support your efforts to become compliant. Okay. There's also, we have other courses that are not through ASAP. We've got one starting November 18th and 19th. It's, of course, the full version of this. If you're interested, just send me a note. I'll pass you on to Rose. We still have some seats available, but yeah, I want to thank USAID, Catherine, and the ASAP team for coordinating. Certainly you and your associate there as a Q&A reader. It makes my life easier to let you read it so everyone can hear the questions and the answers. Any extra comments from our ASAP sponsors?
We would like to thank you, Doug, for doing this satellite session. This is a special webinar, which is the day before the USAID local partner meeting, which starts tomorrow. So thank you everybody for joining, and we look forward to seeing people in the meeting. If you are a Prime local partner already, you should be registered. And if you're not, please send us an email. Please send Susan Milnick an email if you haven't registered, but you are a local Prime partner. Again, thank you, Doug, very much for this lengthy webinar. We always appreciate your good work. And thank you, Abdullah and Leilani, for reading the questions. And thank you, Fikre and Jeff, for your behind the scenes technical support. So thank you, everybody.
Okay. Good luck with your summit. Good luck with your meetings next week.
Thank you so much. Bye-bye, everybody.
Bye.
Thank you.
Thank you. Bye-bye.
Bye.